This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on that internet thing. That would be YouTube. Head over to youtube.com and search Bloomberg Podcast. Tom Keene, he's on a horse somewhere out in Jackson Hole, Wyoming, along with Lisa Bromwitz and Michael McKee. So we have Alix Steel sitting in here. Plenty of time to spare, getting in here starting at 7 o'clock. No worries.
I mean, he's joking. I literally came in 3 seconds ago. But in fairness, I needed my coffee.
We are all set to go, folks. We got 3 hours, lots of good conversation coming up. We're going to check in with Mike Green. He's the chief market strategist at Simplify Asset Management. Get his thoughts about what he's expecting from Fed Chairman Jay Powell, who's going to speak tomorrow in Jackson Hole. Eric Winograd, chief economist at Alliance Bernstein. He's going to join us as well. We're going to have Jess Menton in studio. We're going to break it down. Some of the economic data we're going to see today. We're going to get some jobless claims coming up at 8:30 Wall Street time. We've got some PMIs coming up at 9:45 a.m. So lots of economic data. We've got some earnings data coming out today. And we're going to get a sense of what's happening out there in Jackson Hole. But right now, let's kick off with Lisa Mateo.
There you go. Futures taking a little bit of a breather, and this is after stocks in midweek trading recovered what was lost on Tuesday. Yesterday's payroll revisions, Fed minutes, well, it showed several officials feel there's a case for cutting rates in September. Several actually acknowledged a case for cutting rates at July's meeting. Now, traders are back at pricing 100 basis points of cuts this year. So right now we have NASDAQ futures up about 0.2%, 54 points. Dow futures little changed, up 31 points. S&P futures up 0.1% or 9 points. We have the 2-year yield at 3.95%. That's up 2 basis points. The yield on the 10-year, 3.82%, and that's up 1 basis point. Europe Stock 600 index right now, I want to take a look at that. It's up about 0.4%. Deutsche Bank rallied after predicting a boost to third quarter results. Want to get to earnings now. Peloton, those that just coming in, it looks like revenue forecast missed estimates. Peloton shares right now down about 1%. Urban Outfitters taking a hit, down 10%. Reported second quarter comparable retail segment sales growth, missed expectations. And finally, Zoom Video Communications. They are up 2%. Second quarter results beat expectations, also raised its full year forecast. It also announced that its CFO would resign. That is your Bloomberg Business Flash. Okay. Paul and Alix.
All right, Lisa Mateo, thank you so much. We appreciate it. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. We're also in Apple CarPlay and Android Auto. We're doing all over the technology stuff coming up. Hey, folks, if you're listening to us in Boston, our new home starting September 3rd will be 92 FM. That's the day after Labor Day. Bloomberg Radio moving to 92.9 FM in Boston. How about that? All right, let's get a sense of this market, Alix. I mean, we have a little bit of green on the screen here today. I'm not sure what to make of it other than we'll get into some of the economic data later today. We've had some earnings. My good friends at Peloton. I thought the Peloton numbers were good. I'm riding my bike, 3 or 4 days.
Yeah, I know. You're a Peloton believer. You're definitely a Peloton believer. I don't know. It doesn't look great.
No,
2025 revenue, top line at the top, $2.5 billion versus estimates at almost 2.7.
I know.
It's tough.
I know. I just know what's going on over there. Stock's off a little bit here today, pre-market. Let's check in with Mike Green. He's a portfolio manager. He's chief strategist at Simplify Asset Management. Hey, Mike, what do you make of this market? I'm just thinking over the last 2.5 weeks, from a week ago, 2 weeks ago Monday, when we had that big sell-off on the market and concern out there in the marketplace. This market seems to have steadied itself right here. We've got futures looking a little bit higher here this morning. So, Mike, what are you telling your clients these days about these markets?
Well, I think the most important thing to remember about what happened over the last several weeks was that it was a very technical unwind. We first saw the July CPI print that caused covering in small cap shorts against large cap mega caps. You then had elements of the Japanese carry trade, which then morphed into the unwind of what's called the dispersion trade, basically a complex option trade involving index options and single stocks. Those have nothing to do with the fundamentals of equities or anything else that's actually happening out there. And as a result, once those conditions were actually unwound, the underlying conditions reasserted themselves, which is just a relentless bid for equities coming from employment, people putting money into their 401ks, and that money flowing into passive strategies that candidly doesn't care about any of the economic outlooks.
But I guess the question becomes sort of, the rotation within the market in that if we wind up getting cuts from the Fed and we're not in a recession, does that change the leadership that we would normally expect to see in a cutting cycle?
Not at all, unfortunately. So we went through this same analysis, if you remember, back in 2022, when the argument was high technology companies were trading at high multiples because of low interest rates. Today, we see those same companies trading at equally high, in some cases higher multiples. This time, of course, we're told that interest rates don't matter until, of course, we cut interest rates, and then leadership is supposed to change. That's simply not how markets work. Markets respond to flows, and the dominant flow into market is into the passive bid, that market cap weighted component. And as long as it continues, you'll see the large cap tech names in particular outperform.
So, Mike, it's interesting. I mean, a lot of folks are saying, again, the concentration risk in this market, it's still there. And, in the Mag 7 or whatever, maybe it's a little bit more than that, but that's not good, technically speaking. How do you feel about that?
No, I share your concerns. I think it should be fairly clear from my commentary that I don't think that this is a good thing, but it is a reality, right? And so when you have an environment in which money is flowing into market cap weighted indices and liquidity does not scale with market cap, right? So this is very important in terms of understanding market dynamics. Liquidity does not scale with market cap. It's related, but it doesn't scale. And as a result, the bid for the largest names, augmented by share buybacks, is actually pushing those names higher relative to the rest of the market.
When we look at the next 24 hours, right, Tom Keene's riding his horse, Mike McKee has a cowboy hat. We're going to build up Jay Powell's speech tomorrow at 10 a.m. Eastern time is when we'll get some of those headlines. But what are you going to be watching in terms of the direction? It does feel like we priced in a lot, particularly after the last couple days with the jobs revisions. What do you think we're actually going to hear?
Well, I think the job revisions are really key because alongside inflation data, it tells us that the Fed was far too aggressive in hiking rates. It's not a question of when they're going to cut rates. Now we're dealing with the long and variable lags associated with hikes that were still put in place over the last 24 months. Inflation peaked in July of 2022. By August of 2022, the flexible components of that were already below the averages prior to the pandemic. The sticky components of it, ex-shelter, joined it very quickly after. And so we haven't had an inflationary case for high interest rates. And now we're discovering that we don't have an employment case for high interest rates. The Fed simply has egg on its face. It needs to cut. It needs to cut relatively rapidly. Clearly, I'm not arguing that to support stock markets. But the underlying condition is that we've got the long and variable lags of those last several hikes from 2.5% on up that are still going to filter their way through the economy. Right now, they show up as income for old people and those who have cash in the bank. They still haven't hit term debt markets. And so the impact of those is going to be very slow to emerge.
So, Mike, I mean, do you have a reasonable concern that the Fed may be too late and that, in fact, recession is very much on the table?
Yeah, I think the evidence is actually that the recession is probably already here. We're waiting for revisions to, of course, validate that. There's a lot of changes in methodology and how we calculate GDP that has impacted how these numbers get measured. I think it is important for people to understand that we won't really know what those numbers are for a very long period of time, right? Data dependency has its underlying flaw in that it's only as good as the data that comes in. This is why central planning will never work. Oddly, it's a lesson we forget over and over again when it comes to setting interest rates and monetary policy.
But when it comes to the world of sort of the passive investing, and you kind of mentioned this, right? Like you put money in your 401k, you sit, you hang out. How does that change how the reaction function is from data, from the economic data, from the recessionary issues to the actual market? I mean, all the headlines could be bad and markets can still go up.
100%. This is actually one of the real challenges that exist for managers who are trying to incorporate this changed world. The simple reality is that the markets have become less leading over time. I actually wrote a post on this back in, I believe it was March, called Leading Lambs, in which I highlighted that the ability for the market to forecast a recession has functionally disappeared. It used to precede recessions, market peaks and declines, used to precede recessions by between 6 and 11 months. Today, they begin well after the recession starts.
All right, Mike, thanks so much for joining us. Really appreciate getting some of your thoughts there. Mike Green, he's a portfolio manager, chief strategist at Simplify asset management. He's saying this Federal Reserve better get moving on some of those Fed cuts, and we'll see coming next month. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex, Lisa. Minnesota Governor Tim Walz has accepted his party's nomination for vice president. He used his Democratic National Convention address to thank the packed arena for bringing the joy to an election transformed by the elevation of his running mate, Vice President Kamala Harris. Walz also spoke on Democratic priorities.
Health care and housing are human rights. And the government stays the hell out of your bedroom.
Vice President Kamala Harris will close out the event tonight with her address. Former President Donald Trump spoke from behind bulletproof glass in Asheboro, North Carolina, at his first outdoor rally since last month's attempted assassination. The focus of yesterday's event was national security, but Trump also criticized the White House over a Labor Department report showing the U.S. economy added about 818,000 fewer jobs than initially reported in 2023 and early 2024. Trump saying the administration lied to make itself look better on the economy.
The Harris-Biden administration has been caught fraudulently manipulating job statistics to hide the true extent of the economic ruin that they've inflicted on America.
No proof on that at all, but Trump also criticized his predecessor Barack Obama as nasty for comments made Tuesday night at the DNC. Key mediator Egypt is expressing skepticism about the proposal meant to bridge gaps in ceasefire talks between Israel and Hamas. The White House says President Joe Biden spoke with Israeli Prime Minister Benjamin Netanyahu yesterday with no immediate details on what was said. Finally, Thailand has announced its first case of the new Mpox strain. Mpox, which used to be called monkeypox, has been present on the continent since the 1970s. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. Alex, I'm looking in Jackson, Wyoming. I'm thinking tonight, Lisa Bromwitz, Tom Keene, Michael McKee, and maybe some other central bankers, $1 Million Cowboy Bar. That's the place to be. The bar stools are saddles. For
Stop.
Some. Yep.
I love this for them.
I know. We must get, I'm hoping that we'll find on someone's social media this evening a shot of
McKee's.
Michael or Tom Keene on a saddle in the $1 Million Cowboy Bar.
I would pay $1 million to watch it, the robotic cow. What do you call that?
Oh, yes.
What do you call that?
You want to see Tom Keene
Yes.
ride
Mechanical bull.
Mechanical bull.
Thank you.
Well, I want to see
in a
Lisa
bar.
Bromwitz
I don't
want to
see that, but I understand why you might want to. But they have to get up at like 2 a.m. tomorrow.
They have to
so
get up at
maybe
like 2 a.m.
Friday after broadcast.
Okay. All right. Very good.
They'll hit the bar.
But they're all out there. We're going to actually hear from Tom later in
Well, we
the
can
morning.
ask him. Let's ask him.
We'll ask him.
We're going to go to that bar. We're gonna
now, would he be on
bull.
the mechanical bull with the suit and the bow tie?
Oh,
would
no.
be the question. Too much
Does
there
he
to
have a
think about.
cowboy hat? Did you guys talk about this?
No,
before
Michael
he
McKee
went?
has several.
Several.
I know, because he's from Colorado. He's like a real Western guy.
Yeah, this is his happy place.
Yes, he's very happy
He sent me
out
some
there.
pictures. You could still see the moon in like the middle of the day. It's
Okay.
so beautiful. It doesn't
Yep.
even look real.
Yeah.
It's really probably one of the most beautiful places
It
on
is.
earth.
It's spectacular in summer. I've skied there once, although it's just too difficult. The skiing there is so challenging. And that was when I was a younger person, fine. Now, not so much. So we go to some nicer places, or just easier places. Let's put it that way. S&P 500, we're up 11 points here. The Dow's up 36 points, and Nasdaq's up 63 points. We have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The Bloomberg Interactive Broker Studio. I'm Lisa Mateo. Futures right now, little movement. This is ahead of a key speech by Fed Chair Jay Powell on Friday at the Jackson Hole Economic Symposium. Right now, we have Nasdaq futures up about 0.3%, 61 points. Dow futures little change, up about 29 points. S&P futures up 0.1% or 11 points. The 2-year yield 3.96%. That's up 2 basis points. The yield on the 10-year 3.82%, and that's up 2 basis points. We'll check with spot gold, lower 2,504 an ounce. We have Brent crude $76 a barrel, WTI crude $72 a barrel. On the economic calendar for today, initial jobless claims for last week. That comes out at 8:30 Wall Street time. We'll also get a read on manufacturing and services and July existing home sales. To earnings we go. We'll start with BJ's Wholesale Club. It reported comparable club sales for the second quarter that topped estimates. Now that excludes gasoline sales, but here's the thing, second quarter revenue fell short of expectations, so shares are down about 6%. And shares of Advance Auto falling down 12%, lowered full year projections for comparable sales and profit. The company also said it's selling its Worldpac unit to Carlyle Group for $1.5 billion. And the pressure continuing to build for Snowflake. Its shares down 9%, delivered a disappointing sales forecast. It also said its CEO was stepping down. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So check us out there. You can search Bloomberg Podcast. You know, whenever I talk to economists, Alex, I get a little nervous because, I took my economics classes in business school. Marginal revenue equals marginal cost. That's kind of the only thing I remember, but we'll see if we can take it to a higher level here with Eric Winograd. He's chief economist for Alliance Bernstein. Hey, Eric, as we think about Jackson Hole here, a lot of folks that we talk to are saying, the Fed's already behind the curve. They should have been cutting rates already, and this really brings the risk of a recession or an economic slowdown more pronounced than maybe what we're seeing to the front burner. Do you share that concern, Eric?
I don't share that concern. I don't think the Fed is behind the curve. A lot of the people who are saying the Fed is behind the curve now are the same people who 2 months ago were saying the Fed would be crazy to cut interest rates ever because inflation is still too high. The Fed has been rewarded during this cycle for being patient, for taking the long view, for looking at the medium term. And I think that that's still the course that they're likely to take. I agree that the risk of a recession has gone up. That's always the case when you reach the end of a cycle, but I'm not losing any sleep over the idea that the Fed needs to panic here.
So the 4 cuts now priced in to the markets. You don't agree with that for this year?
I think they're more likely to do 3 25 basis point cuts. I think it's a given that they're going to cut in September. And certainly they could cut more aggressively. They could cut by 50 basis points, but that's going to depend on the payrolls. If we print some truly weak payrolls number, and I don't think last month's report was truly weak, if we were to print some truly weak numbers, then of course they could move more aggressively. I think there's a good case to be made that they perhaps should, not because they need to panic, but simply because there's no reason for rates to be as high as they are. But again, they've been rewarded for patience. Inflation fell sharply at the end of last year, and they didn't respond to that by cutting, and it stopped falling in the first quarter of this year, and they didn't respond to that by hiking. Staying the course has been the right move for them. I expect them to continue down that path.
Hey, Eric, we just think about, we're pretty much towards the end of the earnings season here. A lot of companies have been saying that the consumer is, I guess cautious might be the term. Mm-hmm. I'm not going to say scared, but cautious. What do you take away from some of the earnings and some of the commentary we've heard about the U.S. consumer?
I think that's exactly right. And, we hear the same things from earnings reports, that the consumer is value conscious or is a little bit more conservative. Again, that's not surprising. Consumers have spent the additional money that they had in the bank coming out of the pandemic. The labor market is still strong, but wage growth has started to moderate a little bit. It makes sense for households to be a little bit more cautious and a little bit more value conscious. That's how inflation falls, right? When businesses perceive consumers to be more value conscious, price increases start to slow, and in some cases prices go down, and that's necessary for inflation to go down. I think the mistake that too many people are making is to extrapolate in a straight line and say, they were spending full throttle a few months ago. Now they're spending a little bit more slowly. So in a few months from now, they won't be spending at all. I think we're just settling into a more sustainable sort of equilibrium.
I have a really unfair question to ask. Do we trust the data, though, and I just go to the labor revisions that we saw yesterday. Like, how can the market have a reaction function to the jobs data? How can the Fed have that reaction function when we have to rethink it every year? And I appreciate the revisions are nothing new, but to the extent, and then how we're sort of trading on it is huge.
So I agree that markets probably should not trade short term around data releases for the reasons that you cite. But again, that's why the Fed takes the medium term view. Take a step back. The revisions we got to the labor data yesterday amount to 0.5% of the number of people working. That's not a huge number, right? So when you take a medium term view, and I think Chair Powell said this very well in his last press conference, the Fed is data dependent, but not data point dependent. Right? They're not looking at every single data point and changing their opinion based on that. And I know that some people in the market, particularly those who trade short term, might be. That's not a particularly profitable way to trade for most people for the reason you cite. You take the medium term view, though, you combine a variety of different data sources and you sort of stitch the picture together from a lot of different angles. And I think that you can see the picture more clearly. That's what the Fed's job is, and that's what they've been doing.
So, Eric, I know in your career you've worked at the Federal Reserve Bank of New York and the World Bank. So let me get a little global on you here. The economic exceptionalism of the U.S. Do you buy into that theory, and what does it mean to you?
I do. You know, the U.S. growth outlook throughout this cycle has been rosier than most of our peers, most of the other major global economies. This is still the most dynamic major economy in the world. This is still the place where growth is likely to be the highest. This is still the place that is attracting the most talent. And that does lead to U.S. growth exceptionalism. Doesn't mean that we're going to grow faster than everybody else every single year, but it still means that, and we've seen this in the performance of financial markets. I think the expected return of being invested in the U.S. is greater than the expected return of being invested in any other major economy over time. You'll have rocky years. It might be a little bit more volatile at times. Certainly our political picture is perhaps not as comfortable from an investment perspective as you would like it to be. But I do think that this is still an exceptional economy within the global context.
Based on that, then, what do you think Powell's going to say tomorrow, right? How does he thread the needle between what you just said? Like, hey, we're still good, right? Labor market is slowing, but it's not falling out of bed. Like, inflation is coming down, but it's not a catastrophe. Like, the job market is slowing a little bit, but it's okay. Like, how does he do that and still set us up for a rate cut based on the numbers?
I think he should just quote you. I think you said it very well right there. You
said literally no one ever to me, so exactly. Thank you.
No, look, he'll say some variation on that and say, look, we're comfortable that the economy is settling into a more balanced sort of expansion. It wasn't sustainable to grow as quickly as we had been growing. And with the economy settling into a more sustainable growth rate, there's no reason for interest rates to be as high as they are. And so we're going to gradually and in a data-dependent way move back toward a more normal setting of interest rates, which we think is something around 3%. You know, we're at 5.25% now. Eventually, we want to be at 3%. We don't feel a sense of panic or urgency that means we have to get there right away, but that's the direction we're going to go.
All right, Eric, thank you so much. We appreciate it. Eric Winograd, Chief Economist at Alliance Bernstein. I'm thinking, is Eric saying interest rates are coming down? I'm going to refinance that mortgage on the Jersey Shore compound, which is sitting at 6%. I'd love to get it with a 4 handle. But
yeah, that's going to take a while, though.
But you're at 2 and what?
Yeah, I'm 2.75%.
Oh, man.
Sorry, buddy. But
you're never leaving, by the way.
I'm never leaving. No, I'm going to die in that apartment. But I think that the point for you is that how fast does it wind up actually coming down?
Yep.
So, Leah, you get 3 cuts this year, but if it stays there, that's not going to be enough for you to refi.
That's not going to be enough. No,
yeah.
No. All right, here's a news story. Because one of my first jobs on Wall Street was covering the railroad industry for Payne Webber and Equity Research. Canada's 2 biggest railways, accounting for almost 80% of the national network, shut down early Thursday after talks with the union failed, immediately blocking arteries of North American supply chains that carry about $740 million of goods per day in trade. That can't be good. Yeah, that's not good.
Also, they're rerouting now a lot of freights to different ports, particularly in the U.S., which is then causing a backlog, etc. No, this feels like a really big nightmare
it
for
does.
everyone
the
involved.
Canadian Pacific. I once took a trip on Canadian Pacific, I think, when they built a tunnel through like their Canadian Rocky Mountains. So it cut their transit time coast to coast from 7 days to 3 or something crazy. It was just way back in the day. So, all right, we're paying attention to our friends up in Canada here, and hopefully they can get that rail strike rectified soon for global trade. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Slight movement in futures this morning. This is after yesterday's stock move suggests traders ready for any surprises from Fed Chair Jay Powell's speech Friday. We have NASDAQ futures up 0.3%, 66 points. Dow futures, little changed, up about 32 points. S&P futures up 0.2%, or 12 points. The two-year yield at 3.96%. That's up 3 basis points. The yield on the 10-year, 3.83%, and that's up 2 basis points. To currencies, we have the dollar stronger. Japanese yen down about 0.5% at 145.97 against the dollar. Euro weaker. British pound stronger. We have Bitcoin up a fraction at 61,000. Few companies making news. Disney looking for some help finding a new CEO. It's named James Gorman, former chief executive officer at Morgan Stanley, to lead that search for a successor to Bob Iger. Those shares right now of Disney, little changed. Apple may be looking for a new executive too. Sources saying the head of its App Store, Matt Fisher, he's leaving in October. The company has been under regulatory pressure on its App Store lately, and those shares, Apple up about 0.5%. And Starbucks' new CEO will have a special perk to get him to Seattle every week from his home in California. According to Brian Nichols' offer letter, he's going to have access to the company's private jet to meet their RTO rules.
Yeah.
That is your Bloomberg Business Flash.
God forbid he flies a commercial. Very good. Good for him. I would do the same thing, by the way.
Like if you were a CEO?
Oh, yeah.
Oh,
Totally.
for sure.
You
But
have
then
to have the jet.
How do you say no to the actual people that want to work from home?
Exactly.
Or ask for, like, can you help my commuting costs?
It's a nice deal if you can get it. But I remember the stock was up like a gajillion% that day when he was hired. So, I mean, I think he's already earned it. All right, folks. Lisa Mateo, thank you so much. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. If you're listening to us in Boston, the greater Boston area, our new home, starting September 3rd, will be 92.9 FM. That is a big signal up in New England. That's the day after Labor Day. Bloomberg Radio moving to 92.9 FM in Boston. Go Yankees. Scott Cronin joins us here, head of U.S. equity research, strategy, all that kind of stuff at Citi. I don't know, Scott. We've had some volatility. I mean, 2 weeks ago, Monday, Tom King's vaunted VIX was over 60. Now we're down at 16. What do you make of kind of what we've seen in these markets over the past couple of weeks, Scott?
Well, Paul, it's great being on. And I was thinking of the action in the VIX and how we could use some of your old healthcare services support. But, in any event, I think what we just have to keep in mind is that, the markets, when things happen incrementally, okay, the markets are pretty good at adjusting and adapting. When you have shock effects where there's something new that enters the picture, that's where you typically see these more abrupt moves in the VIX. And what we had a couple of weeks back was this concern regarding the yen carry trade. I won't get too much into that, but what we think that triggered was sort of a degrossing across the spectrum of investors that manifested in a couple of things. One was a very quick drawdown in U.S. equities, but the other was this big spike in the VIX. And history says that those spikes in the VIX don't usually persist. Usually you get that shock effect priced in, and then once that's happened, then you'll tend to see the volatility metrics calm down, which is what happened, and it's really not a huge surprise from that perspective. At the same time, you had the stock pullback, as we mentioned, and I think what's happened since then is that, again, same deal. In terms of the shock effect, it's worn out, and we're kind of back to where we were a few weeks back, looking at the potential pivot out of the Fed, an easier rate regime further ahead. In the meantime, per our work anyway, the earnings picture and backdrop fundamentally for the S&P is in really good shape.
Like I mentioned, you got a 5,600 target for the end of the year on the S&P. But hang on, you're bearing the lead here. Paul Sweeney called your elevators the worst on Wall Street. I mean, do you agree? Do you need to defend this? I mean, I feel like he's really accusing you of something here.
Yeah, well, I think it was. I'm not going to comment on that. But what I would say though is that there's something going on here where, heck, I think across America you're seeing elevators being upgraded to meet sort of environmental and other standards, and so give it time. They're getting better.
I think your answer said a lot, Scott. I just want to point that out. Okay, so you walked us through kind of how you set up the scenario and the reaction function of the market. Do you think that Nvidia next week is going to be a market event or just an Nvidia event?
Alex, it's a really good point. I think it's going to be mostly an Nvidia event with some market read-throughs. So let me explain. So, the way we set this up, it was 6 weeks ago as we were kind of going into the third quarter, is that you had three forces at work in the S&P that defined the first half performance. Remember, at the end of Q2, index was up about 15%. You could attribute 5 percentage points of that move to each of Nvidia, the rest of the Mag 7, and the other 493. So going into the second half, we've had to contend with how to view those three forces at work in the markets. At the same time, we've got soft landing conviction at hand right now, I would say. Although there is still lingering recession risk, you still have this AI tailwind, and then you have election outcomes also sort of in the background. All told, what I'm getting at here is that there's no doubt, given its weight within the S&P, Nvidia's action and in response to its earnings next week will be important. But the Mag 7 has been moving down a more idiosyncratic path over the better part of this year. So I don't think that the read-through will be as broad-based as may be commonly perceived.
Interesting.
Hey, Scott, we're just kind of finishing up earnings season here. As the city strategist here, what did you take away here? What did you hear from your analyst? How are earnings?
I think earnings came through as we expected. Paul, we got a beat and hold, right? So what does that mean? That means that if we went into the Q2 reports expecting 8% earnings growth, we got 10%, okay? So Q2 results better than expected. But what you also got was the back half of the year, second half expectations came down by about the same amount. You saw about a 2 percentage point reduction in second half growth. So all told, what we've got is continued strong performance right now, but with expectations for the second half still, I think, a little bit subdued as we're navigating recession or not, but in any event, some signs of softening economically, and I think that is a force that's still at work.
Do you think that the dollar and the weakness there has contributed to the equity stability, if I can say that, over the last week or so?
What I would say, Alex, is that historically, give me a strong or versus a weak dollar, I'll typically take the weak dollar as a signal of more confidence in global economic conditions. So, but there's two sides to that discussion. So what I would say here is that, generally speaking, a stronger dollar is a bit of a circle the wagons, if you will, around the U.S. versus rest of the world. But I think as we go down this path of generally speaking, central bank easing a bit more globally, I think it's a pretty good setup for U.S. equities. And so I'll take the weaker dollar.
Weaker dollar, pretty good setup for equities. Scott, are there some sectors that you guys like right here? Do certain things screen better for you guys?
Yeah, so this is where it's going to get a little bit interesting. So again, going into Q3, our call was pretty clear. Hold that mega cap growth cohort, okay? We like the fundamental positioning, but expectations had gotten pretty stretched, okay? In the meantime, what we were arguing, hey, look, we're getting closer and closer to this, let's call it Fed pivot, less restrictiveness, potentially more dovish tone out of the Fed. And so we want to be aligned with those sectors that should benefit from that. That's consumer discretionary, it's financials, and it's even real estate. Now, with the drawdown that we had 2 weeks ago, we made a courageous call to go down this growth is defensive path, where if you are concerned regarding recession risk and you have to navigate that economic valley, we like the big cap growth setup. So on that pullback, we got more aggressive there. But our underlying view is still, hey, let's position ourselves to benefit traditionally from what should happen with a weakening interest rate backdrop.
I mean, I love that. So the growth is defensive. So is that just, though, going to be tech? Or what else can we look at if we don't want to go buy Mag 7?
Yeah, I think it's going to be primarily tech, because I think that's probably where there's the most steady-as-you-go conviction in the growth setup for the balance of this year and looking ahead. Keep in mind, Alex, that the Mag 7 at Q2 earnings posted 38% earnings growth, and that's versus the other 493 posting about 5%. So you got to love that, right? So I think what it says is that let's lead with that mega cap growth cohort, particularly on pullbacks, particularly as recession concerns creep back in. But it's not just tech. It's going to be kind of company by company as you look across this concern regarding the underlying economic condition. Companies that we think are in a better, more visible place to demonstrate earnings growth through that ought to benefit, particularly if you get sort of a falling interest rate tailwind to valuations.
Hey, Scott, thanks so much for joining us. Scott Cronin, he's head of U.S. equity strategy at Citigroup. He's based out there in San Francisco. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex, Lisa, Minnesota Governor Tim Walz accepted the nomination for vice president at the Democratic National Convention last night in Chicago. The former high school teacher and football coach connected former President Trump and his running mate J.D. Vance to a conservative plan to overhaul the government called Project 2025.
They spent a lot of time pretending they know nothing about this. But look, I coached high school football long enough to know, and trust me on this, when somebody takes the time to draw up a playbook, they're going to use it.
Vice President Kamala Harris will wrap up the convention tonight with her address. Meanwhile, former President Donald Trump was campaigning in North Carolina yesterday. He told his supporters it's hard to talk policy when the Obamas are attacking him at the DNC. Bloomberg's Ed Baxter has that story.
Trump at a rally in North Carolina says he'd like to focus on policy because his advisors told him it's the right thing to do. But he complained to the crowd, "Did you see Barack Obama taking pot shots at your president? And so was Michelle." So he asked the attendees, should I get personal or should I not get personal? The crowd liked him going on attack.
I try and be nice to people, you know, but it's a little tough when they get personal.
The Obama attacks were aimed at focusing on the way Trump attacks his opponents with name-calling. Polls have tightened in North Carolina. Ed Baxter, Bloomberg Radio.
Ukrainian President Volodymyr Zelensky visited his top general in a northeastern region bordering the area of Russia, where his troops are fighting to expand the territory they've controlled for more than 2 weeks after a surprise attack. Ukraine's military chief says Kyiv's forces took another settlement in Russia's Kursk region and have increased the number of captured Russian soldiers for the latter exchange. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg Paul, Alex, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney live here in our Bloomberg Interactive Broker Studio. I've got WTI crude oil at $72. Are our friends in Texas and Oklahoma, are they happy with that?
Yeah, it's a good question. I'm not sure. I think it's the direction of where we're going to go. Like UBS still says we could hit 90.
90.
There could be some geopolitical risk that pops up, maybe by the dip now. That's what Citi was saying. Maybe get to 80 in the short term. But I think from these guys, what they say, it's stability. I mean, how much you believe them and how much you talk in their book is different. But if something is stable, it's easier to sort of bet against and manage, which is the same thing for, I think, any commodity input company. My question for you, Paramount.
Yep.
What do you think?
I guess they're taking this Edgar Bronfman deal or potential bid seriously. He's got like 20 equity folks along with him because he doesn't have the money, unlike the Ellison clan, which has gajillions of dollars behind them. I don't know who's providing any debt financing. Again, I'm going to fall back on my call, which is, we don't have a credible bidder anywhere for this company.
So even Ellison, you don't think is?
No.
Okay.
But,
why?
When you think about Paramount, one of the leading studios in Hollywood, you think about either a significant strategic buyer, whether that's Apple or somebody like that, or a major financial buyer, a KKR, a big private equity firm coming in here. I don't have either of them. I've got some folks that you really don't know, and you really don't know of their capital that they have behind these deals. So I will see what happens here. All you have is Sherry Redstone, the controlling shareholder of Paramount.
For National Amusements.
Yeah, National Amusements, exactly, saying that she's willing to sell. And that's the green light for getting some kind of deal. So we'll follow up on that. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. NASDAQ futures leading the charge this morning, up 0.3%, 62 points. S&P futures up 0.1%, 10 points. We have Dow futures, little change, up about 19. The 2-year yield at 3.97%, up 4 basis points. The yield on the 10-year, 3.83%. That's up 3 basis points. Another thorn in the side of Paramount's plan to merge with Skydance Media. Sources saying media investor Edgar Bronfman Jr. raised his bid to $6 billion. Those shares up about 2%. Binance hiring 1,000 people this year, with many for compliance roles. Its annual spending to meet regulatory requirements tops $200 million. And finally, Neuralink said surgery for its second brain implant in a human, well, it went well. The patient now able to design 3 objects and also play video games. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene, who's out in Jackson Hole. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Bloomberg Surveillance this morning is brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/IRA. Well, we now want to head out to Jackson Hole for a discussion with the Kansas City Fed President Jeffrey Schmidt, who's signaling he wants to see more data before supporting any decision to reduce rates. He spoke with our own Michael McKee in Wyoming. Let's go to part of that discussion now.
I think it made sense, or makes sense for me to really look at some of the data that comes in the next few weeks, and I think this mandate on the inflation side is really important. I think we seem to be getting some really good movement that direction, but before we act, at least before I act or recommend acting, I think we need to see a little bit more.
Well, are we essentially on the path to it? In other words, if we get, as predicted, inflation numbers, jobs numbers in the next month, would you agree it's time?
You know, I like the word path, and I also believe that we've seen some cooling in the labor market that also kind of works in tandem a little bit with that. Not exactly sure I would go there just yet. I think it kind of is the nature of what happened with the inflation numbers and how much of those inflation numbers were kind of supply driven that got cured, and then how much is the policy restrictive. And I think while it's restrictive, I don't know if it's overly restrictive. So, for me, policy implies patience, and I would say let's be patient.
Well, what are you worried about? What would be the scenario that would drive inflation back up again?
So if we get any kind of spark in demand, I mean, I go around the 10th district quite a bit. We still have unemployment numbers in the 2.5%, 3.5% range. I think a lot of people are looking at how do we hire skilled labor over the next 12 months. So I still think we could see a little bit of demand pickup if we're not careful with the decisioning. At least from the 10th District standpoint. I'm a big fan of the Beige Book. I try to understand what's happening in 10th District and then try to see what's happening regionally with the other 11 banks. And I think from a trend standpoint, things look pretty good, but I still think we have some time.
I'll let you tell me what you thought of the report that the Bureau of Labor Statistics put out at 818,000 fewer jobs over the 12 months to the first quarter of this year.
Yeah. So the first thing that comes to mind is why are we getting the data wrong in that regard? The second is if you look at it seems like a large number until you put it in perspective of the 12 months. So, while it's a big number, it doesn't really change the path of the way I think of things when I think about monetary policy and the effect of the labor force and what's going on. I'm actually really interested in the dynamics of the labor force, really coming out of the pandemic, the behaviors, the compensation structures, the demographics. I think studying those relative to the future labor force, maybe thinking a little bit about what generative AI does to things like productivity. I think those are important things to look at. Now, we have to look at some of the data relative to what we do with policy in the labor force, but the recent print here isn't a big concern for me.
So you wouldn't agree with the argument that some make on Wall Street that the Fed is behind the curve?
No, I don't really agree with that. I mean, I here again, I think we've got to get as a Fed better at the data sets that we're using. I'm a new central banker. I'd like to see us move toward a more real-time data set versus there still seems to be some serious lags in some of the data that we get. So using new technologies, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, where's the data coming from and can we rely on it?
That was Kansas City Fed President Jeffrey Schmidt joining Michael McKee in Wyoming at Jackson Hole, and Mike McKee joins us now. Okay, Michael, I have a couple really pressing questions for you. One, did you bring your cowboy hat, and what color is it? Two, did you go to the $1 Million Cowboy Bar yet?
Yes to both questions, and I can tell you that the hat is white this year. It doesn't mean we've just elected a pope. It's just the color I chose this year to go with it. But we did stop by the Cowboy.
Nice. I got to go there. I love that. Like the seats.
Yep.
Has Tom Keene been there yet? We were wondering if he was going to ride on the mechanical bull, but we don't need to see that.
He's only just arrived.
Okay. So there is time. Okay, back to the seriousness. So it does seem, though, that Jeffrey Schmidt was more worried about the inflation part than the labor part and the economy part. Is that a fair interpretation?
Yes, and this is a district that historically has focused on inflation more than growth and jobs. Jeff Schmidt's predecessor, Esther George, and before her, Tom Honig, they were known as the hawks on the Fed because they felt inflation was a bigger danger, and they always warned about inflation when other people weren't seeing it. And that may be the case right now, but Schmidt is taking it very carefully. The interesting thing in our discussion was his talk about what he's hearing from his district, that people in the 10th district are still seeing growing demand, even though interest rates are higher. And so that gives him pause about whether or not the inflation dragon has been slayed. And he'd like to see a little more data. I think he'll vote with them to lower rates in September, but he wants to be convinced.
Michael, is there any scuttlebutt out there in Jackson Hole about how aggressive the Fed may be in September as it relates to 25 basis points versus perhaps 50 basis points?
No, a lot of people are looking to see what Chairman Powell has to say about that tomorrow morning and whether he would even get into that. The feeling is the Fed would much rather do 25 basis points and see how that works. And you'd have to have some really bad data in September to get them to go 50. But there is an argument to be made for it if you think the economy is slowing faster than anticipated. And that argument got a little bit of a boost with yesterday's jobs revisions. So we'll see if the chairman wants to take that on in his speech.
Yeah, and also through the minutes, too. I know that some are pointing out that the quote, the vast majority observed that if the data continue to come in about as expected, it would likely be appropriate to ease policy at the next meeting. And then also talking more about the jobs data and how they're worried about a faster deterioration. How do you think that Powell will leave the optionality?
I think he'll basically stick to the formulation that he's used, that we are making progress. We have more confidence now after the data that we've seen, and it will soon be appropriate to lower interest rates. I don't think he will say we're going to do it. He doesn't want to lock himself in, especially with a jobs and CPI report between now and the time they meet on September 18th. So he'll use the kind of Fed language, Fed speak, to get around that.
All right, Michael McKee, thank you so much. We appreciate that. Michael McKee, he's economics editor for Bloomberg TV and Radio. He is out in Jackson Hole where the sun has not risen yet. It is dark out there, but you're in the middle of kind of nowhere, which is cool. I mean, it's a great thing. And I've been there both in the winter to ski. Awesome. I can't ski there anymore. It's too tough. But in the summertime, it's really cool. And I went to Old Faithful. Go. It's a great family thing. Take the kidlet and go out there because it's awesome.
I want to go there. I want to go to Montana, which I heard is supposed to be like the most beautiful place on earth. Yeah,
right there.
The whole thing would be really, really great. I would be very into that. Also, you know, he looks so happy when he's there.
Well, he's a Western guy, right? Colorado, native Denver, went to Colorado State. So I think Michael McKee, with the cowboy hat, which he can wear anytime on my show, I would think, right?
Right. I mean,
it's awesome.
I wear my cowboy hat on my show.
Exactly.
So there's that.
All right, so we're going to have more coming up. We've got futures, S&P up 12, Dow up 34, the NASDAQ up 66 here. in here, Global Wall Street. We'll have more coming up. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Russ Koesterich. He's the global head of investment strategy for BlackRock Scientific Active Equities. We'll get his thoughts on these markets. Jennifer Lawless, professor at this university in Charlottesville, the University of Virginia, on Tim Walz's introduction to the nation last night at the DNC. Jess Menton, Bloomberg News equities reporter, is going to join us to react to the jobs claims and discuss why the BLS figures yesterday had a muted market reaction. She's going to be in studio. She wrote actually a story about that yesterday. So nobody talks up their reporting better than Jess Menton.
Yeah, she's
great.
great.
Great at that stuff. I mean, I love that.
Oh, she subbed for me yesterday, Bloomberg Intelligence, right?
Yes, and I think she's coming in today. I don't know what's going on here, but
they don't let me work 5 hours on radio. That's just for you.
It's in your contract. I understand. You have an agent. I don't. All right, but first, let's go to Lisa Mateo and start this whole hour off. What do you got for us, Lisa?
You got it. Futures right now taking a little bit of a breather. Stocks in midweek trading recovered what was lost on Tuesday. NASDAQ futures up about 0.3%, 64 points. Dow futures little changed, up about 29 points. S&P futures up 0.2% or 11 points. The 2-year yield 3.97%, up 4 basis points. The yield on the 10-year 3.84%, 4%, and that's up 3 basis points. To earnings we go. Peloton, and when we first reported this this morning, it gave this week forecast for sales, subscriptions, current quarter. Now we're learning reported revenue, profit beat estimates in the fourth quarter. So now we have shares higher, shares up about 8% for Peloton. BJ's Wholesale Club reported comparable club sales for the second quarter, topped estimates. That excludes gasoline sales, but second quarter revenue, that fell short, and shares down about 7%. And Advance Auto falling down 11%. It lowered its full year projections from comparable sales and profit. The company also said it's selling Worldpac unit to Carlyle Group for $1.5 billion. Later this afternoon, we'll hear from Ross Stores, Kava Group, Intuit, and Workday. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. He's out at Jackson Hole. We're hearing from Tom a little bit later on this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast. And if you're listening to us in Boston, our new home starting September 3rd will be 92.9 FM. That's the day after Labor Day. Bloomberg Radio moving to 92.9 FM in Boston. Go Yankees. All right, let's check in with our first guest here this
hurts,
hour.
Man.
That does hurt. I'm going to get a note from somebody soon, I know this. Russ Koesterich, Global Head of Investment Strategy at BlackRock Scientific Active Equities. Hey, Russ, we've heard, I guess, for a while now about the economic exceptionalism of the U.S. economy vis-a-vis other parts of the world. Does that carry over for you in terms of where you look for active equity opportunities, U.S. versus rest of the world? How do you guys break that down?
Thanks, Paul. It does. And it actually has an influence both bottom up and top down. Just to clarify, actually, I think your bio might be a little dated. I actually co-manage the Global Allocation Fund with Rick Reeder. So we have a global mandate. And it does make a difference. And the reason is there are two ways to look at this. First of all, as you say, the U.S. exceptionalism, the strength of the economy, the fact that our labor market's been remarkably resilient, the consumer has been resilient. You think about the difference we're seeing right now between the U.S. consumer and the Chinese consumer. There are lots of reasons to focus on the U.S., but there's another one that's not really captured just by the economic data, and that is when you look for companies that have the type of characteristics I think you want in this environment: revenue growth, profitability, stable margins. You just find more of them in the United States, whether we're talking about technology, communication, healthcare, than anywhere else in the world. So I do think that the U.S. exceptionalism, particularly in terms of the types of companies we find here, has given us a reason to stay overweight the United States.
Hey, Russ, it's been a while. It's really good to chat with you. So based on that, what do you think is happening with the dollar? Like the carry trade unwind from dollar yen that we saw, but then the dollar's been hit. I appreciate it's up today, but it doesn't feel like the downside to the dollar is over. Some are talking that you can do sort of a short-term short. How does that play into your allocation thesis?
We don't have a huge dollar position right now. I think we have seen weakness in the dollar. That probably says more about the fact that there's been a little bit, well, not a little bit, but a fair amount of data the last few months that signals that the Fed is finally going to start to be able to cut rates. And Alex, as you know, we started the year expecting, not we, but the market expecting 7 rate cuts. And now we're going to get our first one in September. So this is giving a little bit of an excuse for investors to sell the dollar. That said, I think one of the things that's happened that also is affecting the dollar is one thing the dollar did a good job of in 2022 and 2023. It was hedging your equity risk. In other words, when the market was going down, the dollar was going up. And in that way, it was serving a role that bonds used to play. As the dollar's been weaker lately, we're not seeing as much of a role for the dollar as a hedge. So we've really been keeping our currency exposure pretty close to home.
Russ, I'm just looking at the VIX here. We're, 16 right here. But boy, 2 weeks ago, Monday, this thing exploded out to north of 60. What do you make over the last 2.5 weeks of this market volatility?
Paul, that was incredible. And really, someone sent me a great chart on that. It looked at the previous spikes in the VIX, 2008 during the financial crisis, 2020 during the pandemic. I mean, these were world-changing events that had significant downside to them. And then you had this spike in the VIX off of what were, looking back in hindsight, two somewhat weak economic prints. So I think the short answer is it was way overdone. And it said much more about the position of the market, a crowding in a number of trades, a reliance on the yen carry trade for a number of investors than it said about the macro environment. I think the reality is, yes, the economy is slowing. We had some evidence of that yesterday. We had a revision to the non-farm payroll numbers, but the economy is not collapsing. We still have decent retail sales. And I think that movement in the VIX a few weeks ago was just way overdone.
Right. And it's the whole idea that we're slowing, we're not slumping, we're normalizing,
Yes.
we're not falling off a cliff. And like squaring that is going to be, it seems to be tricky for the markets. Talking about bonds, what's the best allocation here?
So we've been bringing up our bond allocation. We've been underweight bonds for a very long time, mostly based on inflation, also based on supply. We're still a little bit underweight at the long end, which really reflects more supply concerns than concerns about inflation. But we have been buying back bonds mostly in the belly of the curve. So talking about that 5-year range. We also have a lot of bonds in our portfolio that we bought back in 21 and 22 on the corporate side, high yield investment grade when spreads were wider. We're not really changing that much, but we're happy to keep clipping those coupons because in an environment, as you say, where the economy is slowly not collapsing, we're not very worried about the default rate. And for the first time in years, you can build a bond portfolio that's going to give you a 6 to 7% yield without taking too much duration risk.
Russ, how about this earnings season? We've just kind of wrapped up earnings. We've got a couple more retailers coming up here. What's your takeaway here? Anything that kind of changed your outlook for these markets?
You know, it's funny. I think the earnings season was actually pretty decent. You know, we came into it expecting about 9% year-over-year growth. We're probably going to do closer to 13%. So earnings are solid. I think one of the things you did see, though, and this explains a lot of the weakness we saw in tech, at least the relative weakness, back in late July and early August, was that the crossbar for many of these companies has been raised. And just given the exceptional run we've had in software, semiconductors, many parts of technology during the first half of the year, what it took to satisfy investors, the level of beat you had to generate, there's certainly some evidence that that became higher. And I think that's one of the reasons that, you know, tech wobbled a little bit in early August and late July.
What about money market funds? So you talk about like clipping a coupon, like why not? Okay, we have like $6.22 trillion in money market funds. It's still sitting at a record. The thesis was that was going to go somewhere. Is it actually going to go somewhere? And I guess the question is, how many rate cuts do we have to see for it to actually go somewhere?
Well, I think it already is. You know, again, we were down about 10% at the lows back on August 5th. We're now 1.5% from the highs. So I do think you've seen that money provide a cushion to the market. And I do believe that as we start to get into this rate cutting cycle and people are looking at their statements and seeing that 5.25 has gone down to 4.5 or maybe closer to 4 next year, that's one of the factors that we think still allows the equity market to go higher into the back half of the year.
Hey, Russ, thanks so much for joining us. Really appreciate getting a few minutes of your time. It's Russ Koesterich. He's over there at BlackRock looking at these markets here. The S&P futures up 12 points. With our news in New York City, here's Michael Barr.
Paul, Alex, Lisa, we're going to get to the Democratic National Convention in a moment, but we have breaking news. Italian search and rescue teams have retrieved the latest body from a sunken yacht off Sicily, and it's believed to be the body of British tech tycoon Mike Lynch. Lynch and Morgan Stanley International Chair Jonathan Bloomer are among those feared to have died. Authorities say a total of 6 people likely were trapped and died inside the yacht when it was hit by a waterspout on Monday. Minnesota Governor Tim Walz made a direct appeal to swing voters in America as he accepted the vice presidential nomination last night.
If you're a middle-class family or a family trying to get into the middle class, Kamala Harris is going to cut your taxes. If you're getting squeezed by prescription drug prices, Kamala Harris is going to take on Big Pharma.
Bloomberg's Laura Davison has more.
His speech was aggressively Midwestern. And as a Midwesterner myself, I recognized a lot of the themes that he was hitting in there. This was very much an Americana, down-home type speech. He was really leaning into his small-town roots. He grew up in Nebraska, lived much of his life in Minnesota, and he's really talking about his experience as a teacher, as a football coach.
Bloomberg's Laura Davison, part of our team covering the DNC in Chicago. Tonight, Vice President Kamala Harris will wrap up the 4-day convention. Former President Trump and his running mate, Ohio Senator J.D. Vance, rallied supporters in North Carolina. It was Trump's first outdoor rally since the shooting in Butler, Pennsylvania. The Secret Service installed bulletproof glass around Trump at the rally. During his remarks, Trump said if reelected, he'll reverse the Biden-era policies he claims are hurting America.
If we don't win this election, we are in such trouble as a country. We're in trouble right now, but you have the right guy to straighten it out. I'll get it straightened out. I'll get it straightened out fast.
And there's word Robert Kennedy Jr. is planning to drop out of the race for president and may endorse former President Trump. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, Lisa.
Michael Barr, thank you so much. We appreciate it. Alex, do you shop at Williams-Sonoma?
No, are you kidding?
No, why
so
not?
Expensive.
Lisa,
why would I
are
do
you
that?
Williams-Sonoma?
No, that's outside
Too
my
expensive?
budget.
Yeah, and even their sales. It's like I'm not going to pay $200 for a skillet. Sorry, can't do it, man.
Wow.
You know doggone well not to even ask me.
No, I know, but I'm just looking at Williams-Sonoma cut its net revenue forecast for the full year. Now sees revenue decline of 1.5% to 4%. Before they're looking decline of -3% to maybe positive 3%. So I think you guys are representative of the average American consumer out there.
But if their deals get better, because I like to, for those of you who don't know, I like to shop on sale. I only shop on sale. I never pay full price except for my skincare regime, period.
Because you invest in your face.
Because I invest in my face.
Understood.
So if they have good enough sales, and I'm talking like you at least have to be 50% off for me to even walk into your store. I ain't doing 20%.
I usually do a 30. I'll go for it.
No, got to be 50.
Wow. All right, there you go.
So if they do that, then we'll talk Williams-Sonoma. But sorry, can't do it.
So it's interesting. I mean, this revenue came in much below expectations, and that kind of goes to the consumer. I think you guys are representative of the average U.S. consumer looking for value. You see that all over the place. Target, exactly. Wal-Mart, and even the fast food. It's all over the place. We'll pay attention to this stuff. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen after just ahead of a key speech by Fed Chair Jay Powell on Friday could offer some clues where interest rates are headed. Now, meanwhile, we had the Fed's Jeffrey Schmidt said he wants to see more economic data before supporting any decision to begin cutting rates. So we have NASDAQ futures up 0.3%, 65 points. Dow futures are a little changed. They're up about 21 points. S&P futures up 0.1% or 11 points. We have the 2-year yield at 3.97%. That's up 4 basis points. The yield on the 10-year 3.83%, and that's up 3 basis points. We'll head over to commodities. We have spot gold lower, $2,498 an ounce. Over to oil, Brent crude $76 a barrel, WTI crude $72 a barrel. On the economic calendar for today, initial jobless claims for last week. That's about 15 minutes from now. That'll come down. We'll also get a read on manufacturing and services, also July existing home sales. To earnings we go. We'll start with Urban Outfitters. You know, the owner of Anthropologie, Free People brands, down 13%. Second quarter comparable retail segment sales growth missed expectations, and the pressure continuing to build for Snowflake. Their shares down 10%, delivered disappointing sales forecasts. It also said its CEO was stepping down. And yes, household good retailer Williams-Sonoma, you talked about it, cut its net revenue forecast for the full year, so shares are lower. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene this morning. He's out in Jackson Hole. We're going to speak with him later this morning. We're here at the Bloomberg Interactive Broker Studio and streaming live on YouTube.com. So search that Bloomberg podcast, and that's where you'll find us here. You know, Alex, it seems like since President Biden kind of stepped down from the ticket and Kamala Harris stepped up the ticket, it seems like the momentum for the Democrats has been extraordinary. I mean, the honeymoon, if that's what we're calling it, it seems like it's continuing right through the Chicago convention.
It does, but it does look like it is somewhat of a dead heat overall. But
yes.
The issue is that with some of the swing states, now they're competitive in a way that they might not have been just about 2 months ago. I think the question is, how much does this actually last? We don't have that long to go.
I know.
So any boost after the convention, does it actually hold?
All right, let's get some perspective here. Jennifer Lawless, she's politics professor at the University of Virginia in lovely Charlottesville, Virginia. Jennifer, thanks so much for joining us here. What do you make of this Democratic ticket here? And we're seeing it firsthand with the VP nominee, Mr. Walz, speaking last night. What do you make of this ticket?
Well, good morning, and thanks for having me. I think the Democrats have put on a convention that allows them to extend their honeymoon period. Every night there are exciting speakers, there are more celebrities. It's all for the build-up tonight with Kamala Harris's speech. And they have momentum on their side, and they decided to keep it going. So if they can keep the energy alive for the next 75 days, they're very well situated to pull off a win on Election Day. But as you mentioned, it is very, very close. And what we've seen in the last month indicates that a lot can change in 75 days.
Oh, yeah, a lot can definitely change. Walk me through the swing states and sort of how the polling is going there. And does the because the conventions are really to the base, right? So what's going to move the needle in the swing states?
Well, so the conventions are to the base to mobilize and energize them so that they're then willing to go out and work for the campaign and volunteer for the campaign and do everything they can to convince every undecided voter to cast a ballot for Kamala Harris and Tim Walz. And so revving up the base matters because these are the people that then go to Wisconsin and Michigan and Pennsylvania to encourage independents and swing voters to cast their votes for the Harris-Walz ticket. And basically what we're seeing is momentum on Kamala Harris's side, even in those swing states. Most of the polling is still within the margin of error, but it wasn't prior to Joe Biden getting out of the race. And it looks like there are multiple paths for Harris. She could go for Michigan, Wisconsin, and Pennsylvania. She could also try to get to the 270 electoral votes through the Sun Belt because states like North Carolina, Arizona, Georgia, and Nevada are also now in play.
So, Professor, what is, well, let me ask another question here. When should Kamala Harris sit down with the press? And
good question.
I mean, that seems like a reasonable attack from the Republicans on this candidate. What do you think your strategy should be?
I think the strategy was right to wait until after the convention. This was record speed. It's only been 4 weeks, and she had a lot to do to get ready for this, including vet a vice presidential nominee. But I think that over the course of the next few weeks, there's no question that she has to sit down and do some sort of long form interview. The debate is also going to be really helpful. That's in a couple of weeks, and that'll give her an opportunity to more explicitly state and defend some of her policy positions. But even if there is not concern among Democrats that she hasn't spoken to the press, this is becoming a major criticism on the part of Republicans. And the only way that she can defend against it is to do it.
Yeah, exactly. Is she gonna? Do we know?
My sense is that she will. I don't think that we're going to be in a position where she's going to be holding these press conferences the way that Donald Trump has. But my sense is that she will do what traditional presidential candidates have done, which means have one or two pretty long interviews leading up to Election Day and several press opportunities.
Professor, what do you think the strategy of former President Trump should be against this renewed momentum coming off of the Kamala Harris ticket?
Well, if you listen to his campaign and the people that have been polling on the Republican side of the aisle, he does have an edge on some facets of the economy and on some messages regarding immigration. So many of his surrogates are out there talking about the economy and immigration because they know that that's their best argument to move forward. If he could stay disciplined and do that, this might look a lot different. But for whatever reason, and there are many of them, Kamala Harris has really gotten under Donald Trump's skin, and he can't stay on message. And every minute that he's not staying on message is not only a problem in that moment, but those are the clips that then get shown the next day and the following week. And it just looks like the campaign is struggling to figure out what their message should be when the surrogates have made it clear that their message is the economy and immigration.
When we take a look at, say, the moderate Republicans or independents or those that can go either way, what are they looking for that we know of that would, because at this point, we know who President Trump is. We know who Kamala Harris is. Like, what's going to move the needle for those guys?
I think there are a few different groups of them. So some of them want to know what the Democrats are going to do regarding the economy and the southern border. And it's unclear to them what Harris's position is. Now, she's been part of the Biden administration. For political junkies, it's not that unclear what the position is, but she's got to communicate that. For another group of voters, they don't want to vote for Donald Trump, but they need to be convinced that Kamala Harris can win this race. These were people who were not excited about Joe Biden because they thought that their vote was incidental. It wasn't going to matter. And then there's a final group of people who really care about the direction of the country and the future. And I think the Harris-Walsh message about freedom is smart because it can apply to almost any issue. And so the question then becomes, who's able to communicate more effectively to those voters? Because there are things that both candidates offer them, and it's just going to ultimately be a race to the finish.
Jennifer, what's the role, if any, of President Biden in this campaign?
I expect that we're going to see Joe Biden quite a bit in Pennsylvania. They love him. He resonates with them. He's from there. And Pennsylvania is a must-win state for Donald Trump. So if the Democrats can hold Pennsylvania the way that Joe Biden won it in 2020, then it makes it almost impossible for Donald Trump to win the White House. So my bet is that he's going to spend much of the campaign over the course of the next 2 months there.
All right, Jennifer, thank you so much for joining us. Really appreciate it. Jennifer Lawless, she's a professor of politics at the University of Virginia in the lovely Charlottesville, Virginia. Be sure to catch Bloomberg's Joe Matthew and Kaylee Lines. They're going to be at the DNC tonight on a special edition of Balance of Power starting at 8 p.m. Wall Street time on Bloomberg Radio and Television. So they're going to have the latest there from D.C.
And going till the end of time.
Yes.
Because these guys have run really, really late.
Yes.
I got to say.
I have to admit, I don't know why, from a programming perspective, just from a media, television perspective, why you would put your A-list speakers so late, so out of the window for much of the country.
Well, Jody Schneider was talking to us a couple days ago, and she was like, there was a lot of security to get into the event, etc. But sure, guys, come on.
Yeah, you're right.
Like your stage manager, your program director,
Yes.
like, let's get this together. Like, I can't watch something at 11:45 p.m. at night.
No, but I mean,
Girls gotta sleep.
You know, I mean, if the NFL can figure this out, which is you start, Monday Night
Fair.
Football not at 9 p.m., but at 8 p.m., that's how you maximize your audience, East Coast and West Coast. Maybe these conventions can figure it out as well. So we'll see. But we got Kamala Harris speaking tonight, so that'll be
fun.
The keynote there. And so again, be sure to catch Bloomberg's Joe Matthew and Kaylee Lines from the DNC tonight on a special edition of Balance of Power starting at 8 p.m. Wall Street time on Bloomberg Radio and Television. How good is that?
It's so good. And also, we're just moments away from initial jobless claims. Let's see about that reaction function, right?
Yep.
Estimates coming in at 232,000. We'll break down the latest. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Yeah, we are just moments away from initial jobless claims for last week. Ahead of it, let's check the markets right now. We have NASDAQ futures up about 0.2%, 55 points. We have Dow futures little changed, up 21 points. S&P futures up 0.1% or 10 points. We check the 2-year yield at 3.95%, and that's up 2 basis points. All right, the numbers coming in. So initial jobless claims for last week. The survey was for 232,000 coming in exactly at 232,000. The prior 227,000, that was revised up to 228,000. A little shift in the market. NASDAQ futures still up about 0.3%. Dow futures little change. S&P futures up about 0.2%. I know you guys are going to break it down even further. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. And if you're listening to us in Boston, our new home starting September 3rd will be 92.9 FM. That's the day after Labor Day. Bloomberg Radio moving to 92.9 FM in Boston. Initial jobs came right smack right in line.
Yeah, I mean, feels like a nothing burger.
Same with the revision, nothing. I don't know. So let's focus on what we're going to see from Jackson Hole, the $1 million cowboy bar notwithstanding. Jess Menton joins us here in studio. She covers all the markets for Bloomberg News. Jess, you write nonstop, you publish nonstop, then you do radio and TV. I don't know how you do it. Give us some of the stuff you guys are writing on now as you think about what we might hear from Fed Chairman Powell tomorrow.
So coming into this, even last week, as we know, because this month, when you're looking at volatility, very elevated. But originally, if you were looking in the options market for the potential swings there, they were expecting a swing of at least 1% in either direction. But that's actually come down this week because over the past week, as you know, Paul and Alex, we've had at least a half a dozen different Fed speakers clearly signal that they're open to rate cuts for next month. And so really, it's more of the tone that Powell has during this. And because even if you're thinking about Bill Dudley, obviously and a Bloomberg opinion columnist here, but a former Fed official at the New York Fed had signaled that don't expect there to be any sort of indication on what the size of the cuts could be. But clearly when you have different hawks like McKee Bowman come out, kind of trying, still somebody who's open to cuts, but want to walk back those expectations for something like 50 basis points, which in WIRP, we've seen that come down to about 30 basis points now for that next meeting. So when you're looking at the swing now, it's about 0.8% for the S&P 500 of a swing in either direction that options markets are betting on. So really, they're expecting at least Powell, as long as he keeps the tone clear, then that to them is the signal that it would be kind of a live meeting here at the September meeting.
What's the skew? So is there more, is it more expensive to buy puts or calls, which would then basically understand if that positioning that you're talking about, that 0.8% swing is to the up or downside?
Yeah, so I did a story on the skew in particular and looking at puts. So they've dramatically fallen. So at the start of the month when we saw what was happening, so you can go and look on my bio page, I have a chart on that. So it was actually around 40 million for the puts, and that was right when volatility spiked at the start of the month. And through actually yesterday, it was around 16, 17 million. So you've seen that come down a lot when it comes for hedging with puts there. And another thing I'm keeping a close eye on as far as what it means for when it comes to traders trying to bet for decline in volatility ahead, I actually look at when it comes to open interest in options that bet on a decline in the VIX. So actually right now it's hovering near the highest level since July of 2022. So that would tell you that traders are betting on volatility to ease further from here.
Jess, what do they think is going to happen when the Fed does begin to cut rates? Do they cut 25 basis points every meeting? I'm looking at the WIRP function. I have no idea how to
It's always different,
that.
Right? When you do go into WIRP to see what it changes day to day. So sometimes people will kind of throw that out the window depending on what day and what data starts coming out. But a lot of that is the expectation for it to be a more measured pace, because obviously I know that people were concerned about the July jobs report that showed a slowdown in hiring, but everybody always wants to talk about a trend. That was one report. And even we were talking about the revisions yesterday, Paul, where the options market wasn't expecting there to be a big move because it was very backward looking. And Fed Chair Powell even talked about back during his press conference after the June meeting that he was aware that some of those jobs data was overstated. And also Goldman Sachs was pointing out that a lot of that data didn't include undocumented workers because it was going off claims and the wage picture for that. So actually Goldman was arguing that it could be up to 1 million workers that were not actually included in that. So actually, if anything, with some of the revisions we would have seen yesterday, that would actually understate still what job growth was. So that's important as far as because it would signal it would be a more measured pace for the Fed is what traders are betting on rather than something more aggressive, because if it was more aggressive, that would be a signal that the economy would be slowing further than expected. But we're looking at the latest Atlanta Fed GDP models. It still shows healthy growth for the current quarter.
But I think my question though for that is that I understand it's backward looking, but the reaction function of the market when we during the August report, well, the July report that we got in August was so extreme, and we even saw what was the last week with initial jobless claims, such an extreme reaction in the market. And when you have that kind of revision, does it change that reaction function?
Well, actually, a lot of that sell-off started happening the day before that jobs reading came out. So you had markets rally that Wednesday, July 31st, whenever Fed Chair Powell was obviously speaking and signaling that he was open to those rate cuts in September. Then the following day, you saw that sell-off started beginning, but a lot of that also was tied more to technical factors like the dollar yen and the carry trade. So that was unwinding even before that jobs report. So that was probably more of a catalyst for selling, but that wasn't just the only part of that. But again, I feel like when you are speaking with traders, a lot of this data is very backward looking, especially with the revisions, because they go from April of last year to March of this year. So it doesn't give you a clear picture of, say, what the July data would have looked like or prior months right before that too.
All right, your equities compadres, Elena Popina, Matt Turner, and Natalia K. I'm just going with that. Natalia K. I'm not even No, I'm not going to go there. I can't do it.
She's being a producer on Alex's show.
I know.
I know.
You can do it.
All right, how was it again?
Can you? Well, now I can't do it. No.
You're putting the pressure on her.
Natalia, come in here and tell us how to say your name.
So
look, she's right there. She just walked by.
She just walked by.
She doesn't even know.
We're talking about her. All right, they had a good story out. Banks obtained crucial jobs data while the report was delayed.
I'll explain this. So this actually had to do, because you and I was filling in for obviously the great Alix Steel yesterday from 10 to 12. So I was in with Paul. So when the data was supposed to come out at 10 a.m., it was delayed. So Paul and I were covering that. Actually, a lot of what they're talking about is more economists started calling, because obviously they have their modeling that they're trying to get out to clients. So they would call the BLS to try to figure out, why is this delayed? Can we get the numbers? So they were able to get some information from the BLS. But a lot of that was rolling out because they had certain state-related data and other things like that. So that story that they wrote, that's what they were talking about, that economists were trying to get.
And then you quote our good friend Yelena Shuliateva. She's a senior economist at BNP Paribas, formerly at Bloomberg Economics. She's an economist there. She kept refreshing the webpage, waiting for the numbers. Then she said, we called the public line a couple of times and they gave us the number.
That's
so
right.
There you go. Okay.
Oh, wow. That's interesting.
So that's what basically kind of the crux of the story was. So a lot of economists were trying to figure out.
Steve Rasciuto at our good friend.
The clients wanted to know where's the data, so they had to call the BLS to try to get it.
Okay, next market event is going to be Nvidia.
Yes.
And we were talking to Scott Croner over at Citi, and I asked, is Nvidia going to be a market event or an Nvidia event? What is the options market talking about with that?
Yeah, so Stu Kaiser at Citigroup, so he covers the option side of things, and Croner does more of the sort of equity calls as far as where the S&P 500 year-end targets would be. So right now, Stu Kaiser sees the implied move for Nvidia to be a swing of either direction of about 10% move there.
Wow.
So that's actually above the long-term average, which is around 7.5% in either direction here. So clearly, and this is also Nvidia's earnings are coming out next Wednesday. I will be off next week, so unfortunately I will miss this. But y'all have fun.
Okay, but let's be totally honest.
Yeah.
Will you be looking at the numbers?
Of course.
And will you, yeah, okay. So you're going to be doing some backdoor working.
Right.
I'm off on Wednesday too, and I'm definitely not going to be looking at the
No,
numbers.
I'll be looking.
Paul, I leave you.
I'll probably be somewhere off in Europe, but I'll still be checking.
Yeah,
You're going to be in Europe?
Of course you will be.
Yes, I don't know where yet. I'm still trying to figure
Whoa.
out. You know how
So
I do this,
you're
Paul.
going to be
I
on
have a
vacation
lesson.
next week.
Yes.
In Europe.
Yes.
But you don't know where.
Correct.
I don't get it. Do you just have a flight?
No, I'll figure it out Saturday. I'll book something and just hop on a flight.
Wait,
I do this all the time.
You don't have a flight?
I went to Prague. I did this when I went to Greece. I do this all the time. I just kind of figure it out.
Way to do it.
It's how I roll. It's a lot of fun. It keeps things entertaining.
Oh my God, my husband's brain would explode. like he can't even handle an airport. No, he's a travel freak out.
Okay.
So he's fine.
Oh, I got that TSA pre-check.
No, me too. I'll go half an hour before boarding, and he's like, "Can we go 4 hours before, please?"
I'm usually racing. I'm the one running. I'm like, "Don't close the doors."
I used to do that back in the day. Anyway. So all right. So I can't wait to hear where you're going because I know. Are we thinking? Do you have any idea? Are we doing Rome? We doing Paris?
I was thinking maybe. So I was in Italy in May for my birthday. So I'm thinking maybe I go to Spain and Portugal this time around.
Portugal.
It's gonna be busy though. There's gonna be a
all
lot
the
of
kids are
people,
going to
but
Barcelona.
That's right. It sounds like a good time.
Wait, hold on. And I have a special guest in here. Get over here, Natalia. So
Okay.
we were talking about how to say your last name. Paul won't do it,
I won't
and then
do
I
it.
got put on the spot, and it was horrible, and I got upset. Go, get in there. Kunjevich.
Kunjevich.
Wow. So I definitely have been saying it wrong, but at least I tried.
Kunjevich.
No, one more time. Come on. Kunjevich.
There you go. Kunjevich. You guys had a great story yesterday on this whole, letting the data go. So we appreciate that. All right, Jessman, thank you so much. I can pronounce that name. Jessman going to be in Europe next week. We don't know where, but we'll find out together, I guess. Jessman, Bloomberg News. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. Tonight, Kamala Harris will close out the Democratic National Convention in Chicago. Last night, Minnesota Governor Tim Walz officially accepted the vice presidential nomination. The former high school teacher used his football coaching background to motivate the crowd.
Let me finish with this, team. It's the fourth quarter. We're down a field goal. But we're on offense and we've got the ball. We're driving down the field.
Former President Trump and his running mate, Ohio Senator J.D. Vance, rallied supporters in North Carolina. The topic of Trump's speech, national security. During his remarks, Trump pledged to ban gender-affirming care in the military.
If you want to have a sex change or a social justice seminar, then you can do it somewhere else, but you're not going to do it in the Army, Navy, Coast Guard, Air Force, Space Force, or the United States Marines. Sorry.
This was also Trump's first outdoor rally since the shooting in Butler, Pennsylvania, the Secret Service installing bulletproof glass around Trump. The Italian Coast Guard said today the body of British tech magnate Mike Lynch is among those recovered off the coast of Sicily from the wreckage of a super yacht. The bodies of Lynch and 4 others were recovered by rescue crews. 1 woman remains missing. British-flagged yacht, whose builders had called it unsinkable, went down in a storm early Monday as it was moored about a half a mile offshore. Civil protection officials said they believe the ship was struck by a waterspout and sank quickly. 15 of the 22 people aboard survived. Key mediator Egypt is expressing skepticism about the proposal meant to bridge gaps in ceasefire talks between Israel and Hamas. The White House says President Joe Biden spoke with Israeli Prime Minister Benjamin Netanyahu yesterday, but no immediate details on what was said. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. Alex, I have no idea what to make of this story, but members of Wal-Mart Plus will soon get discounted meals at Burger King. The latest in a string of new benefits as membership program chases its far larger rival, Amazon.Prime. Lisa, Mateo, Alex, mean anything to you guys?
No, I don't
I
understand.
think it's because a lot of Walmart's customers go to Burger King, so they think that that's going to kind of be the draw to get more people to join them instead of Amazon Prime. I'm not too sure.
Or it's just basically like a perk in order to sort of ditch Amazon Prime to go to Walmart Plus, right? But if you just look at the money, a full price membership for Walmart Plus is just $98. Prime costs $139.
Yes,
when I was Amazon Prime first, it was $99. Like, it's totally worth it, but still, like, that creeps, and all of a sudden you're looking at your subscription services and going, wait, what?
All right, Amazon Prime I think is a great deal because you get the video service and all that. But just the crazy delivery stuff is just amazing, totally worth it.
Well, okay, if there was like free Chipotle in there,
that might get my attention.
Right, okay, so just Burger King's not for Paul.
But I mean, as Bloomberg is reporting, now Walmart is adding discounts at Burger King, a chain that is popular with Walmart Plus members, executive said.
See?
Lisa, you're right. I mean, I never would have. I guess that makes sense. But again, Walmart Plus, you probably got to be there because I mean, every quarter, Walmart's e-commerce stuff is up 20%. I mean, they continue to do a great job. It's unbelievable how Walmart does compete. I mean, they're right there with Amazon, I think, just in terms
because also with Walmart, they're basically a huge warehouse store at the end of the day. All right, coming up, we're going to talk more about the DNC tonight with Bloomberg Reporter.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Not much movement in futures. This is after initial jobless claims for last week came in basically right on target with expectations. 232,000 applications. The prior was revised up to 228,000, so just a slight change there. Continuing claims, that edged up to 1.86 million. So right now, NASDAQ futures up 0.2%, 44 points. Dow futures little changed, up 15 points. S&P futures up 0.1% or 7 points. The bond market, the two-year yield 3.97%, up 3 basis points. The yield on the 10-year 3.83%. That's up 3 basis points. We have spot gold lower, 2,501 an ounce. Brent crude $76 a barrel. WTI crude $72 a barrel. Well, it looks like the fight for top talent at U.S. law firms, it's starting to heat up. The Financial Times says they're offering junior lawyers as much as $50,000 to refer people for a job. And McDonald's expanding. Wall Street Journal reporting it plans to invest $1.3 billion in the UK and Ireland over the next 4 years, opening up new restaurants, creating over 24,000 jobs. And finally, could fast food chain Chick-fil-A soon become Flick-fil-A? Deadline says it's working with a few major production companies to create family-friendly shows for its own streaming platform. Just what we need, another one. That is your Bloomberg Business Flash. Paul and Alex.
What?
I know. I'm going to leave that right there.
Streaming.
Will there be chickens?
Chicken and
dancing?
streaming. Go figure. All right, we got Alix Steel here. Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so check us out there. And you go to Bloomberg Podcast, and that's where you'll find us there. Let's go back to Chicago. Talk a little politics, because that's where the Democrats are. They are gathering here for the big night tonight. Vice President Kamala Harris was speaking tonight. She'll be the keynote. Jonathan Tamari joins us. He's a Bloomberg reporter for Bloomberg Government. He is in Chicago. Jonathan, what do you expect to hear from Vice President Kamala Harris tonight in her really big speech?
Yeah, I think she's going to be talking about turning the page, and it's an interesting kind of situation in this campaign because she is effectively an incumbent. She's part of the administration, the number 2, but she is presenting herself as the change candidate here, a change from both Joe Biden and from Donald Trump. Even though he's out of office, he's kind of dominated the political conversation for a long time. And honestly, like a change in the face of America as somebody who is part Black, part Asian American, a woman, a change from, 2 older white men who had been on the ticket and who many voters did not like for a long time now.
When we take a look at what's happening outside, there was a lot of worries about the protesters and if there would be any violence, etc. Was this like a 1968 situation? How has that played out? Like, what's the mood outside on the ground?
It's been a lot more tame, I think, than people expected. Certainly far short of 1968. There are certainly people who are protesting, people who are making their voices heard, but it has really not filtered into the events inside the arena or even really near the arena. They're about a half a mile away, and walking around in kind of where all the main events are, you're not really aware of them.
Jonathan, between now and Election Day, is it just all about the swing states? Is that where we've come to?
Pretty much. These elections are going to come down to 6 or 7 states. 10,000, 20,000, tens of thousands of votes in those 7 states or so. And so if you live in those states, expect a barrage of visits and television ads. And if you don't, maybe they'll come through for a fundraiser, but you're probably not going to see a lot of the candidates directly.
Now, you're a Congress reporter, right? So I guess my question also becomes, regardless of who wins the White House, what are we looking at in terms of the makeup of Congress?
So it's going to be closely divided either way. There's almost no scenario where one party's going to have like a major supermajority in either chamber. The Senate is a really tough climb for Democrats. The map just favors Republicans. Democrats would basically have to win every tough race in order to keep control there. But they say they're optimistic, but it's a tough climb. The House is a little bit different. Democrats more optimistic there. A lot of the key races are in New York and California, which obviously are blue states on a presidential level. They're hoping that a big presidential win in those states will get them the seats they need to take the majority. But like Republicans, they'll probably end up with a pretty small majority if they do.
Vice presidential nominee Tim Walz, how did he do last night, do you think?
Well, I think he was an interesting contrast, not necessarily in policy to Kamala Harris, but in personality type, where she's the kind of hard-driving lawyer from the coast, kind of a type A personality, I think we could all agree. Walz is that more kind of Midwestern dad guy, talking about coaching football, having, his former players and students coming up on stage with him. I think he gives more of a different vibe. And I talked to a delegate here from Iowa, and she said, yeah, he just represents the middle of the country much more than Harris or even some of the other Democratic contenders for vice president would have.
When do you think we get more policy, right? So today's going to be the end of the theatrical event. It's going to be about inspiration, etc., future, change 2.0, I guess, if we could put it like that. When do we get actual policy?
I don't know how much we're going to get, to be honest with you. I think that candidates have realized that elections are much more decided on feeling and gut and vibes and kind of who do you relate to on a personal level, more than voters looking at, writing down all their policies and checking boxes about who fits which policy for them. I think voters tend to pick the candidate they like and then suit their policies to fit what that candidate is offering. So I don't think either party sees a huge upside in going deep on policy. It brings a tax, and I don't think it actually attracts that many voters, which I think is unfortunate. We should know what these folks are planning to do, but I think politically they're not going to offer a whole lot.
Jonathan, when you talk to folks in Chicago, how do they expect former President Trump will conduct the campaign between now and Election Day?
Well, it depends who you talk to. Republicans want him to focus on policy. They want him to say, look at all the liberal positions Kamala Harris took, especially when she ran for president in 2020, and some of the things she said about Medicare and the Green New Deal and policing that they think are very unpopular still. Trump himself has focused more on personal attacks, questioning her racial identity, raising false insinuations about that, questioning her intelligence. And Republican consultants don't think that's a winning message. The issue is Trump is Trump. He has always kind of focused on the personal. And so I think that's where the expectation is, unless he maybe sees himself slipping in the polls and changes course. But he has not really shown a lot of inclination to do that in his time on the national stage.
Yeah, last question here. RFK Jr., any thoughts on that?
Wow.
Okay, well, the producer said it. I'm a sub. I feel like I need to represent. Any chatter about who he's going to endorse? Anyone care about that?
I mean, people think he's going to endorse Trump. I don't have any personal inside information on that. I don't think there's a ton of chatter. I think it's more kind of like a sideshow here. Although, look, if he brings 1-2 percentage points, that could be enough. Pennsylvania's been decided by less than 1.5 percentage points each of the last 2 elections. So if he's able to bring that along, maybe, but he hasn't seemed to have a lot of traction. My suspicion is that he already probably gets a lot of folks who maybe vote for Trump anyway.
Just real quick, Jonathan, in terms of speakers, anybody kind of surprised to say, oh boy, this person could be the future?
Well, there's a bunch of folks who are kind of auditioning to be that person. One person, I think, who made an impression, well, I think obviously Pete Buttigieg, he's not a surprise person. But some of the younger folks, people like Jasmine Crockett, Congresswoman from Texas, kind of made her mark on a viral kind of insult fest with Marjorie Taylor Greene and got a big state moment out here. Congressman Andy Kim from New Jersey also is going to be likely the next senator from New Jersey. Has a really interesting personal story and will be the first Asian American senator from New Jersey. It was interesting to see him get a big time speaking slot last night as well.
All right, very good. Jonathan Tamari, thanks so much for joining us. Jonathan Tamari, he's a reporter for Bloomberg Government. He is in Chicago, we think at a youth hostel, right? Is that kind of our thinking at the moment?
I was just saying that the backdrop, what hotel room is that? Guys, the top lighting is terrible. Let's at least paint a wall that's not so horribly white.
Yeah, these are real reporters. These are gumshoe kind of guys. They don't think about TV and kind of lighting and all that kind of stuff. They're just reporters.
I'm not dissing him. I'm dissing the lighting people in this hotel and the wall color and this dark
I bet it's
mahogany
tough to get a
wood.
hotel room in Chicago these days with the convention in town.
It's Airbnb at that point. Anyway.
Exactly.
But we support your reporting, Jonathan.
Yes, we
Don't
report
worry.
Jonathan's reporting. We support him saving Bloomberg some money by going to the youth hostel in Center City, Chicago. S&P 500 up 11 points, the Dow up 30 points, and NASDAQ up 64 points. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in that fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Julia Pollak. She's the chief economist at ZipRecruiter. Get her thoughts on this labor market. In studio, Matt Winkler, the founder of Bloomberg News. He's got a nice column on the great state of North Carolina. That's going to be a pivotal state here coming up in this election. He breaks down the economics of North Carolina. Penny Foley, portfolio manager, TCW Emerging Markets Group, is going to talk about the opportunities in emerging markets. So a lot coming up in this hour. Let's kick it off with one, Lisa Mateo.
You got it. And we have futures. Still have green on the screen. Initial jobs claims show that the labor market is cooling only gradually. We have a slight lift, about 4,000 to 232 applications filed last week. We have NASDAQ futures up 0.3%, 75 points. Dow futures up 0.1%, 58 points. S&P futures up 0.2%, or 14 points. To the bond market, the 2-year yield 3.97%, up 3 basis points. The yield on the 10-year 3.82%, and that's up 2 basis points. To earnings we go. We'll start with Peloton. Reported revenue profit that beat estimates in the fourth quarter. Shares up about 12% right now. The company also easing those worries about its leadership, saying that its CEO search is, quote, well underway. BJ's Wholesale Club, their shares down 7%. Comparable club sales for the second quarter topped estimates. That excludes gasoline sales, but second quarter revenue, that fell short of expectations. And shares of Vance Auto really taking a hit, down 22% now. It slashed its full-year outlook for sales and profit. Now, later this afternoon, we'll hear from Ross Stores, Kava Group, Intuit, and also Workday. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate it. Alix Steel sitting in for Tom Keene. He's out at Jackson Hole doing what? We don't know. He's going to be reporting on the Jackson Hole Symposium. We're going to hear from Fed Chairman Jay Powell tomorrow. Lisa Abramowitz, Michael McKee, Tom Keene are going to have special programming tomorrow, live tomorrow morning from Jackson Hole, so that'll be good. But we'll hear from Tom this morning to see what's happening out there.
Right? Like, how does he bring the Carlisle cocktail to Jackson Hole, Wyoming, to the, what was it, the
$1 cowboy bar thing. Or
$1 million cowboy bar. I mean, can you do that? Can you bring the Carlisle there?
If anybody can do it, Tom Keene can do it. He's got Lisa there. He's got Michael McKee. So I think we've got the A-team out there, surveillance, bringing you the latest from Jackson Hole. Let's talk about this labor market here. We had unemployment tick up to 4.3%. The folks tell me that's still good. Don't get too worried, but it's definitely up from where we were 3.4%, just maybe 9, 10, 12 months ago. Julia Pollak joins us. She's the chief economist at ZipRecruiter. And if anybody has their finger on the pulse of this labor market, it's the good folks at ZipRecruiter. Julia, what's your view here of this U.S. labor market?
Well, the momentum is the issue. In 2018, 2019, when unemployment was around this level, it was coming down. And of course, right before the pandemic, it was just 3.7%. So in a very short time, it has broken that level and continued to rise. And the problem with unemployment is when it rises a little bit, or at least sufficiently, it tends to rise more in the coming months. It sets off a little bit of a cycle. And that is what we don't want to see.
Right.
So clearly monetary policy is too tight.
Right. So it's like a little bit can eventually go a long way, in essence, when the U3 rate starts to rise. So what kind of labor do companies want? So they call you and they're like, hey, I need help finding these workers. What are those workers?
So what a lot of employers are saying right now is we have lots of openings. We have lots of things we want to do. We have lots of growth plans. But we think we'll hire more in the back half of the year. And that's code for when interest rates come down. Like, we're looking at the things we want to do, and they don't pencil out right now with such prohibitively high credit costs. And that's what companies have been saying for quite a while. I think many of them hoped that interest rates would start normalizing sooner. And so this is sort of a lost opportunity economy right now. It's a wait and see economy. In healthcare, in government, in sort of industries that are completely kind of impervious to high interest rates, that are insulated from them, it's still, hiring season, and employers are competing for talent like mad. Healthcare, demand for physicians, nurses assistants, physicians assistants is off the charts and really remains very, very high. But the economy outside of healthcare, the private sector outside of healthcare has been adding very, very few jobs. Its employment has been growing unusually slowly there. And that's because everyone's kind of waiting to see what the Fed's going to do.
So yesterday, Julia, we had the economic data about the BLS data being revised down by, I guess, about 800,000 or so.
Right.
On my 35 years on Wall Street, I never thought that was even an issue. But yesterday, we made a big deal about it. What do you make about it?
So I think doing statistics is hard. We can't survey every employee and every employer every month. So we survey a little sample of them. And we have models and assumptions. And then once a year, when we get more comprehensive data, we test those assumptions and adjust them. This is a normal process. I think people are confusing these annual benchmark revisions with the monthly revisions that take place that are usually in the tens of thousands. So people are thinking, wait a second, they usually revise the numbers by 5 or 10,000. What do you mean 800,000? This is a conspiracy. This is terrible. This is unbelievable. There's no crazy business here, no conspiracy. This is something that happens that's pretty normal. In obviously in raw numbers, this is the biggest revision ever. In percentage terms, it's actually, not so much bigger than normal. Under Trump, we had a revision like this of over 400,000. So this is a normal part of the process. And doing statistics is especially hard when the underlying conditions are changing. And right now, the labor market is slowing, and it's slowing pretty rapidly.
That's what I tell my daughter when I'm helping her with her math. I was like, numbers are hard. Let's just be
This
clear.
stuff is hard.
Numbers are hard.
Yeah.
So when you talked about the areas of the business cycle that are interested in hiring, et cetera, do you get a sense that there's a delay also because of election uncertainty, either delaying CapEx, delaying hiring, just to see what's going to happen in terms of, say, taxes in the next 6 months?
So look, in some industries, if I were to tell you, hey, why don't you go in on with me on an investment in an oil well? You might say, hey, let's just see who wins this election first. Maybe we'd rather want to put our money in a solar field, right? Like, there are some industries where it makes sense to pause investments now and see who gets into power. But in most industries, it's not really going to make much of a difference, frankly. Okay, some policies that Democrats like will raise labor costs incrementally, and some policies that Republicans like will likely, cut taxes. But overall, it's not going to make a huge difference to the company's growth plans and strategy. So no, I think it causes a small delay in certain industries, but not much of an impact other than that.
Hey, Julia, we're going to hear from Fed Chairman Jay Powell tomorrow from Jackson Hole. What do you expect to hear?
I think he's probably going to spend most of his time talking about what we now think the terminal interest rate, the long-term interest rate should be. And, for a long time, the Fed's projections have that at around 2.5%. It's been creeping up lately, 2.6%, 2.8%. And there are many economists who think that because the United States is just spending like a drunken sailor, that rate has actually gone up. No one wants to hold our debt. A lot of these treasury auctions have been pretty lackluster. And we're probably going to have to offer a higher interest rate for people to hold this stuff going forward, because there's just no discipline in DC and no restraint on either side. And one side wants to raise spending and one side wants to cut taxes, and there's no one who wants to bring our fiscal house in order. So cutting Medicare and Medicaid and making adjustments is almost sort of off the table these days on both sides of the aisle.
Yeah.
So the long-term rate might be higher. Probably some economists say 3.5%.
Yeah, I don't think it's ever been truly on the table in a meaningful way. Circling back to the areas where you mentioned you still see growth, like nursing care, elder care, right? Are wages coming up to that? Are we seeing an increase in wages with the amount of job openings that we have?
We are. I mean, so the pandemic, of course, was an unusual period where those wages shot up, and there were lots of benefits to be had. But there are still many, many hospitals that are trying to find ways to offer more training assistance, to offer more help with living costs. So I mean, that's a place where, yes, we can expect to see wages continue to rise to incentivize the investments that people need to make in their human capital in order to get those jobs. I mean, the training is not easy. You need to, go to a nursing school or get licensed, stay up to date. So
Right.
you do definitely need to show people the money.
All right, Julia.
That's a hard job.
Yep. Julia, thank you so much for joining us. Really appreciate getting your thoughts here. Julia Pollak, chief economist at ZipRecruiter, with our news in New York City. Here is Michael Barr.
Thank you very much, Paul. Alex, Lisa, Democratic vice presidential nominee Tim Walz used his speech at the Democratic National Convention to appeal to swing state voters. Walz also had a pointed attack at former President Trump's agenda.
Is it weird? Absolutely. Absolutely. But it's also wrong. And it's dangerous.
Tonight, Vice President Kamala Harris is set to accept her party's nomination for President of the United States. Bloomberg's Amy Morris has a preview.
San Francisco Mayor London Breed had some words of advice for Vice President Harris.
When she is herself and giving it her all,
And speaking from the heart, there is nothing like it. She is strong, she is firm, she is committed to doing this work, but also she's a very compassionate person who deeply cares about justice and taking care of people. And she's proven that time and time again with the work that she's done over the years.
Breed says Harris is known for her prosecutorial skills, and while she is tough on crime, she also holds compassion for small-time first offenders. Amy Morris, Bloomberg Radio.
You can catch Harris's remarks live on a special edition of Bloomberg Balance of Power with Joe Matthew and Kaylee Line starting at 8 p.m. Wall Street time on Bloomberg Radio and television. The Republican vice presidential pick, Ohio Senator J.D. Vance, had a chance to listen to Minnesota Governor Tim Walz' speech last night. In it, Walz called the controversial Project 2025 a playbook for a future Trump administration. Vance reacted.
Donald Trump speaks for himself, and all he said about Project 2025 is that his agenda is his agenda, and Project 2025 has nothing to do with his campaign because it doesn't.
J.D. Vance spoke to ABC. The Italian Coast Guard said today the body of British tech magnate Mike Lynch is among those recovered off the coast of Sicily from the wreckage of a super yacht whose builders had called it unsinkable. The yacht went down in a storm early Monday as it was moored about a half a mile offshore. Global news 24 hours a day and whenever you want it. With the Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Paul, Alex, and Lisa.
All right, Michael Barr, thank you so much. We appreciate that. Looking at this market, Alex, I mean, look, futures can be looking a little bit positive here. It just kind of is such a difference from, a couple of weeks ago when we had that kind of panicked selling that Monday, certainly that Monday morning.
Yeah, and any kind of movers right now we're seeing are very idiosyncratic, like Williams-Sonoma, not doing so great, down by about 7% pre-market.
Well, you guys put the...
We did. It's just a pricing thing. They cut their full year revenue forecast, 50% sale, and I'm there, guys. I'm just saying. BJ's also down over 5%. Their full year earnings may fall short of street estimates as well.
How about Peloton? What are they? I mean, I'm a big Peloton person, but they missed.
They did, but their stock was up because I think their margins were a teeny tiny bit better, and their stock is up by almost 11%. So it's like any bit of non-bad news.
Yes, exactly. But it's down 45% year to date. Talk about a pandemic darling there. All right, we're going to have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, futures, NASDAQ futures up about 0.4%, 83 points. Dow futures up 0.1%, 56 points. We have S&P futures up about 0.2%, or 15 points. We have the two-year yield at 3.97%. That's up 4 basis points. The yield on the 10-year, 3.83%, and that's up 2 basis points. Spot gold lower, $2,497 an ounce. We have Brent crude, $76 a barrel. WTI crude at $72 a barrel. We have The dollar stronger, Japanese yen, euro weaker, British pound stronger, Bitcoin down nearly 1% at 60,000. On the economic calendar for today, we told you about jobless claims. We're also waiting for a read on manufacturing and services and July existing home sales. To earnings we go. Urban Outfitters, Anthropologie, Free People brands, down 13%. Posted quarterly sales growth came in below expectations, and the pressure continuing to build for Snowflake. Their shares down about 10%, delivered disappointing sales forecast. And yes, household goods retailer Williams-Sonoma down about 13%. It cut its revenue forecast for the full year. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast. I tell you, I'm a Jersey guy, but two of the best years of my life were spent in North Carolina as a student at Duke University. Man, the state's got everything. It's got the beautiful, well, first of all, it's got Duke in the middle, so let's start right there. And there's some other school down the road. I can't remember the name of it. Then you got the mountains of like Asheville, the western part of the state, and then you got this great coastline, the Outer Banks. It's got it all.
I've heard the Outer Banks are amazing.
Beautiful, fantastic.
I have never. I've driven through North Carolina.
Okay.
On my way to Florida.
That's a lot of people do that. A lot of people do that. Matt Winkler took a look at the state. He did it from a different perspective, like looking at numbers and math and economics and all that kind of stuff. Matt Winkler, he's the editor-in-chief emeritus of Bloomberg News, the founder of Bloomberg News. I got like 2,400 reporters around the world. He started it all. It's all his fault. Matt, thanks for joining us here in studio. North Carolina is a battleground state, I'm being told. It's important. Talk to us about the economy of North Carolina.
Always great to be with you. And the economy in North Carolina actually historically has always been one of the best in the country. And that's especially true in the past 3.5 years, where North Carolina has actually outperformed the U.S. More so than it has in the past, and certainly in the recent past. And so what we're looking at is record personal income growth over the past 3 years, and record job creation. And all of that has made North Carolina, if you like, put it in play. In the current election. Only one time in this century has a Democrat claimed the White House through North Carolina, and that was Barack Obama in 2008. Now we see that the polls are converging to the point where it's too close to call, and that puts Kamala Harris in a very good position.
What are the industries in North Carolina aside from Paul's Duke?
Well, one we at Bloomberg would happily reference is finance. North Carolina actually is the only state, according to data compiled by Bloomberg, that my colleague Shinpei has happily shared with all concerned, which is that of the 10 largest banks in the U.S., 3 are in North Carolina. Really? And no state has that, by the way, not New York, not California. So finance is a huge part of the economy, and it's been booming the past 3.5 years. Information technology has been leapfrogging its historic growth and has overtaken every state actually in growth in North Carolina. So if you put those two together, finance and information technology, both are booming.
When I first got down there, you thought of North Carolina as tobacco. Furniture, still big for both of those. But now, research Triangle Park, so technology, healthcare is another big thing. The kids from Duke and North Carolina and NC State, they're staying in state because there's so much opportunity there. Which brings me, you and Shinpei have a great chart there about the labor market. It's pretty darn tight there, isn't it?
You're talking about an unemployment rate last year that was 3.3%, which is the lowest in this century. Wow. You'd have to go back to the last century to find an unemployment rate that was lower. And a lot of that has to do with actually a lot of things that have come together legislatively for North Carolina. You've had, as people may be familiar with, the American Rescue Plan Act of 21, but then there was the Infrastructure Investment and Jobs Act of 21. There was the CHIPS and Science Act. All of those pieces of legislation, including the Inflation Reduction Act, have contributed to massive job creation, particularly in clean energy. And for example, my colleague Liam Denning noted earlier in Bloomberg Opinion that Toyota is building a facility that in just a few years could employ more than 5,000 people, making enough batteries to power 500,000 new electric vehicles each year. And it's going to be 121 football fields, at least the size of the plant.
Matt, has all of this resulted in higher incomes for individuals living in the state?
Yeah, I mean, that's really it, is that the personal income, which is what we use to measure, is at a record. And that has, just been climbing steadily this year.
How about the demographics of the state? It seems like during the pandemic, Matt, we had so much reporting of people leaving New York and other major markets on either coast and going down to the Sun Belt, which has been a long-term story, but it's kind of got accelerated during the pandemic. Has North Carolina been one of those states that's benefited from people kind of leaving?
Yeah, that's a long-running story of migration from, if you like, the Middle Atlantic region to North Carolina. And it's still very much a story that is real. And that's why North Carolina has almost 11 million people living there, as the 9th most populous state in the country. And by the way, just 2 decades ago, that wasn't the case.
When we talk about the polls and how North Carolina may be in play, do we know why the polls have indicated that Harris now has a chance? What are people thinking and voting on?
Well, there's no question the economy is important. Okay. And, that has been obscured by this seeming frailty of Joe Biden as president. And that has been a topic, obviously, for everyone, put in front of everyone. Once you get past that issue, the seeming frailty of Joe Biden, then you have to look at, well, what is happening in North Carolina? And when you look at the data shows the state is booming. And Kamala Harris now is a beneficiary. Of course, she worked with Biden in much of what he's done over the past 3.5 years. But the economy has actually been getting ever stronger in North Carolina. And by the way, one thing that I didn't reference in the column, but I have in previous columns, which is if you go to a Federal Reserve study that was published earlier this year, and it includes the years 22 and 23, it shows that something like 70% plus Americans are satisfied or comfortable with their own position. Mm-hmm. So that speaks to the underlying economy that probably did not get the attention that it deserved this year because so many people were focused on President Biden's age.
All right, Matt, thank you so much for joining us. Really appreciate it. As always, Matt Winkler, he's the editor-in-chief emeritus. He is the founder of Bloomberg News. Colin, today, he's written a number of columns over the last several months about some of these key swing states, California, Pennsylvania. Here's about North Carolina. And again, having lived there for a couple of years, and I still go back there a lot, there's just a lot going on there. I even thought about it as like the retirement place.
You did?
Yeah, but I'm sticking to the Jersey Shore for a variety of reasons. But if I would have done it near the Duke community down there, but it's just a smidge too far from the beach.
I mean, aside from the fact that then you couldn't come in here and that would be horrible for everybody. Well, the weather change and climate change, you have to wonder how hot North America is eventually. North Carolina will eventually be.
Yeah, everybody's. Yeah,
I don't know about that. Like what's going to last.
But it's a fantastic state there. A lot of good folks. A great barbecue too, by the way, and I think they have some hoops down there as well. S&P futures. We're going to get this market open in just a moment. S&P futures up 15 points. Nasdaq up about 80 points. That's 0.4%. 10-year Treasury yield 3.82% on your Treasury. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Paul Sweeney and Alix Steel with your opening bell report. Now, stocks coming off that recovery of what was lost on Tuesday. Which way will we go today? We did get some economic data. Initial jobless claims for last week came in right on target with expectations, 232,000 applications. The prior revised up to 228, so just a slight lift to claims. Let's see how the market reacts this morning. We'll start with the S&P 500, up about 0.2%, 15 points, 5,636. We have the Dow up 0.1%, 44 points, 40,936. And we have the NASDAQ up 0.4%, 73 points at 17,995. The two-year yield at 3.97%. That's up 3 basis points. And the yield on the 10-year, 3.83%. And that's up 2 basis points. We have spot gold lower, $2,490 an ounce. Brent crude, $76 a barrel. WTI crude, $72 a barrel. At the open, also want to check in with Peloton, and look at that, shares up 20%.
Nice.
That is your Bloomberg opening bell report. Paul and Alix.
Jen Sherman is my favorite instructor.
I like
for
Robin. Even though I don't do it, I'm a big fan of hers.
Okay.
Wait, what do you mean? You don't do it, but you like her? How's that work?
Yes, I follow her. I stalk her on Instagram.
They most of the instructors have very active social media presences. Yeah,
actually, we've had producers leave here to go produce stuff for Peloton.
Really?
In that, it's a real production situation. So you have to have stars, right? Look at Bloomberg Radio. Without us, forget
exactly.
it.
The
You gotta have the
talent, as they
stars.
say. All right, Lisa, thank you so much. We appreciate that. Alix Steel, speak of talent and stars, sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. And if you're listening to us in Boston, our new home starting September 3rd will be 92.9 FM. That's the day after Labor Day. Back to work, Bloomberg Radio, moving to 92.9 FM in Boston. Emerging markets, we love emerging markets. A lot of alpha there for a lot of people if you really pay attention. Somebody who does pay attention to EM is Penny Foley. She's a managing director for emerging markets at this little shop out in LA called TCW. Penny, thanks so much for joining us here. Let me start really at a 30,000 foot level. What do you recommend to people should be a reasonable allocation to emerging markets?
A great question. Surprisingly, pretty much to everybody that isn't in EM, EM fixed income represents about 25% or a quarter of the global fixed income universe. And, no one's going to get there anytime soon, I'm pretty sure, although it would be great. But an increase in structural EM allocations from what's estimated today to be sort of 5 to 7% to a low double-digit level, which is more characteristic of the pre-COVID level or the pre-COVID period, is likely the direction of travel once the Fed begins to cut rates, in our view. From a valuation perspective, EM sovereign yields are currently in the 89th percentile relative to the last 10 years, and the 375 basis point spread differential between EM high yield sovereigns and U.S. high yield is in the 95th percentile. So valuations, while spreads aren't overwhelmingly compelling, certainly yields and relative spreads are. And EM dedicated funds have seen an aggregate outflow about $150 billion over the last 2 or 3 years. So dedicated positioning is pretty light. That said, new issues year to date have been oversubscribed by about 2 to 3 times, so indicating substantial demand from crossovers, which we think are largely global investors who are seeing better value in EM than in the balance of the fixed income universe.
Is the carry trade still alive and well, and what are investors borrowing to then buy in EM?
The carry trade has taken a pretty major hit in the last 3 to 6 months. Carry's great in these markets. The problem you got to worry about is managing currency volatility. And when volatility was relatively low, FX volatility was relatively low, the carry trade was a terrific place to be. As volatility has increased, and while VIX has come down a lot, the currency VIX is still pretty elevated. We're taking a more defensive approach by looking largely at relative value opportunities in local currency, as well as idiosyncratic things like Egypt, which has a lot of internal drivers, less exposed to global issues.
Right. Penny, it looks like this United States Federal Reserve is about to begin cutting rates. How do you expect emerging markets to perform in a world where the U.S. is lowering rates?
Interestingly, EM started to raise rates about a year before the Fed, and so has been able to bring inflation down substantially. In fact, inflation levels in emerging markets are now below pre-COVID levels, not so for the developed world. And financial resilience has increased substantially since the taper tantrum in 2013. Much better macroeconomic policies, significantly stronger current account balances, and that, as you'll remember, is a pretty big source of stress for EM. Now we're talking about emerging markets which had significantly negative external balances now actually have positive external balances, and we expect that to continue over the next couple of years. So they perform really pretty well in this higher rate environment, and we think they will continue to perform well as U.S. rates come down. Essentially, a lot of EM central banks, which started lowering rates because of the significant disinflation, had to stop to wait till the Fed began to make a move. And I think when the Fed does start cutting, which we expect will happen relatively soon, that'll enable local central banks to look at local issues rather than global issues and begin, and restart their own interest rate reduction cycle. So we think it's an environment in which in which EM ought to do pretty well. I mean, there's always the question of why are they lowering rates? Are they lowering rates because they can? Right. So in a soft landing scenario, or because they have to, because things have gotten out of hand and we're headed directly to a recessionary kind of environment. Even in the case of a recession, however, EM is reasonably well situated. EM growth is expected to exceed U.S. growth this year and next by a wider spread than we've seen in the last decade. Upside growth surprises in DM are obviously fading. U.S. growth is holding up pretty well. And as I said, financial resilience has increased significantly. So obviously a recession is not EM positive, but financial resilience and domestic growth dynamics, I think, will continue to favor EM fixed income.
Penny, when we talk about EM, it's a broad brush, right? But in
Absolutely.
EM, there's a lot of differentiators. What in EM looks most attractive, and what do you need to be avoiding?
I think interestingly, EM just sort of as a whole, in terms of credit quality, we expect rating upgrades to exceed downgrades this year. So that's the first time that's happened in a decade. And that reflects some of this better governance and financial resilience that we talked about. When I got into this business, the story for EM investors was simple convergence. Okay, we're going to converge in per capita incomes to the developed world. Spreads will follow, and it'll be, a great opportunity. I think the story has expanded dramatically, and it's expanded really because we're in a world where we've got, a much more, geopolitical tensions worldwide, and you have macro instability in the developed world, and I think that's expanded the EM story from one of just simple convergence to one of strategic opportunities in really a multipolar world. Most EMs are likely to remain as neutral as possible in this environment. You've seen that over the course of the last couple of years, and benefit from shifting alliances both on trade, the nearshoring or the diversification of supply chains, and investment. So a lot of, for example, Chinese investors who would normally be investing at home are now, for risk management purposes, taking their FDI offshore, largely benefiting places like Indonesia and India. At the same time, there is, improving macro prudential policies and deleveraging, favorable demographics, and sort of structural demand for commodities. There's no question that in the near term, EM is going to be importing volatility from the developed world, whether it's a U.S. recession, a U.S. election, or whatever. and that's, so as a consequence, we've really reduced our exposure. We were very overweight high yield going into this year, which worked very well in the first half of the year. We have reduced that overweight and really are focusing on idiosyncratic stories in high yield, things like, again, like Egypt, and avoiding sort of more beta driven names. But I think, active management in this environment is going to continue to be an extremely important approach to the markets.
Penny, thank you so much for joining us. We really appreciate getting a few minutes of your time. It's very helpful. Penny Foley, she's a managing director at emerging markets at TCW. Boy, we talked to like a handful of TCW people.
They're the best. They're
so
good.
Really good. I mean, there's not everyone's been like better than the next. It's really crazy. Lots of good people there. It's definitely one of the anchor meetings when you go out to LA. TCW and Capital Group. Everybody else is gravy. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. Vice President Kamala Harris closes out the Democratic National Convention when she accepts her party's historic presidential nomination. Harris will lay out her vision tonight for the country. Harris will speak a day after Minnesota Governor Tim Walz accepted the vice presidential nomination. Speaking in Chicago, Walz introduced himself as a teacher, a coach, and veteran with bipartisan credentials. Walz also took aim at Republicans.
If these guys get back in the White House, they'll start jacking up the costs on the middle class. They'll repeal the Affordable Care Act. They'll gut Social Security and Medicare, and they will ban abortion across this country with or without Congress.
In an interview with CBS after the speech, former President Donald Trump's running mate, Senator J.D. Vance, responded to some of the accusations.
In fact, I think it really just is fundamentally incompatible with the record. Look, Kamala Harris has proposed giving Medicare to illegal aliens. That would bankrupt that program and throw an entire generation of America's seniors into poverty.
And there's word that Robert Kennedy Jr., a lifelong Democrat turned independent candidate for president, plans to pull the plug on his campaign today and endorse Donald Trump. The Italian Coast Guard said today the body of British tech magnate Mike Lynch is among those recovered off the coast of Sicily from the wreckage of a super yacht whose builders had called it unsinkable. One woman remains missing. The bodies of Lynch, who had been celebrating his recent acquittal on fraud charges with his family and the people who had defended him at the trial in the United States, and 5 others were recovered by rescue crews following Monday's tragedy. Both of Canada's major freight railroads have come to a full stop because of a contract dispute with their workers, an impasse that could bring significant economic harm to businesses and consumers in Canada and the U.S. if the trains don't resume running soon. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, Lisa.
Hi, Michael Barr. Thank you so much. We appreciate it. Jackson Hole, Tom Keene, Lisa Abramowitz, Michael McKee. They're going to have a special edition of Bloomberg Surveillance featuring Tom Keene and Lisa Abramowitz live from Jackson Hole tomorrow starting at 9 a.m. Eastern on Bloomberg Radio and Television. That's going to be pretty cool.
Very much looking forward to that. Paul and I will be here, though, from 7 to 9, taking you through until the special, and then back again at 11. So don't worry, we'll still be here.
Oh, so we get 2 hours off, but then we come back.
Correct.
Got it.
Yeah,
all right.
So you have to delay that whole beach thing. But,
delay that whole
it'll
beach
definitely
thing.
happen.
Yep, exactly.
And, we're going to talk to Tom next.
Right.
You know what my question is going to be?
What?
$1 Million bar, baby.
Cowboy bar.
Cowboy bar.
What do you get when you go to the $1 Million Cowboy
That's
Bar
what
in
I'm
Jackson?
gonna ask.
Okay, very
like,
good.
Do you get the cocktail? What's his favorite cocktail of choice again?
I'm going to say a gimlet or something along those lines. I'm thinking.
He always has a martini glass. So
martini
I don't know.
glass.
Yeah, I know. I knew it was in a martini
It's
glass,
something in
but
the
what's in
martini
it is
glass.
different. So
What's
can
in
you
it?
bring that to
I
the
thought
bar?
it was vodka and Tang, but
Vodka and Tang. That could be a go-to one. But we'll get all that important information in just a couple minutes. We'll check in with Tom Keene. He's out there in Jackson Hole. So he's out there with Michael McKee and Lisa Abramowitz. And we're going to hear from Jay Powell tomorrow. So that'll be the important part of that whole shindig out there in Jackson Hole. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Interactive Brokers Portfolio Analyst. Consolidate and analyze all your financial accounts on one powerful dashboard for free. Sign up at Portfolio Analyst at ibkr.com/freepa. All right, stocks. We have green on the screen after applications for U.S. jobless benefits barely rose last week. Right now, we have the NASDAQ up 0.3%, 55 points. The Dow, little change, up 32 points. We have the S&P 500 up 0.2%, or 14 points. We have the two-year yield at 3.99%, up 5 basis points. The yield on the 10-year, 3.84%, and that's up 4 basis points. Spot gold lower, $2,484 an ounce. We have Brent crude, $76 a barrel. WTI crude, $72 a barrel. Moving the markets, Advanced Auto Parts down 18%. It slashed its full-year outlook for sales and profit. Then you have Williams-Sonoma down nearly 8%, cut its revenue forecast for the full year. And finally, some news from Crayola. It's hoping that its crayons bring back these happy memories of your childhood because it's received a patent for the smell of them. It hopes to pump that smell through aisles of retailers. Unfortunately, it's not going to be available for this back-to-school season, but maybe in the future. That's your Bloomberg Business Flash. Paul and Alex.
All right. Good stuff. I don't know.
You don't like the smell of crayons?
No. I have no strong Crayola
Have you not been to
feeling.
the Crayola factory out in Jersey?
Yes, in Pennsylvania.
Pennsylvania,
Yes,
right. Yeah,
exactly.
I think I did
It's been
3 or
there.
4 field trips to that thing for my kids throughout.
Were you just smelling everything all the time?
Yeah, there's a factory where you make Crayola crowns. It's a thing, and you can go toward it. It's not far away. Head out to I-80 from New York City, and you'll find it. All right, Lisa Mateo, thank you so much. Alix Steel sitting in for the Tom Keene. Why is she sitting in for Tom Keene? Because he's out in Jackson Hole. Where else would you expect Tom Keene to be? He's out there with Lisa Bromwitz and Michael McKee anchoring our coverage out there. Tom, thanks so much for joining us here. I look at your backdrop there, and for those folks on YouTube, you would think it's Photoshopped. It's not, is it? It's that beautiful, isn't it?
It's not Photoshop. It's a Tetons up to near 14,000 feet. We're at about 6,000 feet. Between me and the Tetons are grizz and elk and trout that Lisa will hit over the head with a paddle when she goes canoeing today. But the big thing is I was in the Pioneer Grill this morning.
Nice.
And I was having my starter, a Tito's and Tang, we call that.
There we go.
And I'm in the Pioneer Grill, and there we go. And I'm sitting 10 chairs away from Mr. and Mrs. Powell having their morning huckleberry pancakes. We did the surveillance wave to the chairman. The whole world will be doing the wave with the chairman here on Friday. And of course, that important speech. Paul, it's different here than it would have been even 2 weeks ago.
Yep.
Yes, different from 2 weeks ago. What do you think his wave will be tomorrow to the rest of the public? What are we expecting? What is the vibe there?
Yeah, the vibe is very much a shift over to the real economy, Alex. The idea that inflation's there and the parlor game of the Fed and all that. But will he discuss the shock of those revisions that we saw yesterday, 800,000 plus? Will he discuss 4.3% unemployment? But I would look for a single sentence or even 2 sentences to reestablish the independence of the Fed. We're in an election year, and dutifully, going back to LBJ and frankly back to Harry Truman, this is a chairman that's got to say, we're independent.
Tom, is the feeling out in Jackson Hole that the Fed is on track when it begins to cut rates in September, or is there concern out there among those participants that maybe the Fed's behind the curve?
It's both. The answer is the history of the Fed is always to be wildly ex post, to be after the fact. There's nothing unusual about that. But I would say, and among a select crew, there's a real impatience. Let's go. And you saw that in the minutes. Alex, I never read the minutes. I'm in the middle of the surveillance nap, some, several, all the other foolishness of it. But these minutes really indicated, around the table at the Eccles building, there was some British dissent. There was really the dissent we see in the Bank of England, which we never see in America. Well, you know what? It was a Fed meeting of dissent.
Yeah, and then we get the PMIs today, S&P Global PMIs. Just to point out, we're seeing the sharpest contraction for manufacturing this year. Weakness across the board, right? Production, orders, and employment. And you see the S&P kind of rolling over into the lows of the session. So that real economy, Tom, that you're talking about is quite important. And it's that tension between inflation and the labor data and sort of which way that pendulum swings.
Right, and what's important here is the global over-manufacturing. Without question, my article of the summer is on China's supply. It's an article in Foreign Affairs magazine. I'll put it out on Twitter and LinkedIn if the internet works here. And, I'll get that out. But the basic idea, Paul, is there's just gross over-manufacturing led by China, the conduits through other Pacific Rim nations, even through Mexico, and that is going to be a problem for our viewers and listeners in America. Global oversupply is going to affect the discussion in the markets in America.
Tom, is there a sense out there in Jackson Hole that the U.S. economy really is exceptional? Is that a topic there? Are there concerns about other parts of the world?
It's a third rail, except there's no trains here. We're in the middle of nowhere. But Paul, that is the third rail. And the answer is around productivity. We had Lachman Achathan of Ekrian the other day, and I think he beautifully said it. Nobody knows. Nobody has a clue other than there's this technology overlay. I sat right here on this lawn 15 years ago and received a lecture from the giant Alan Meltzer of Carnegie Mellon that you have to aggregate statistics. And I would suggest, and you've heard me say this, Paul, not every day, but enough to bore you to death, but I would really suggest that there's not two Americas, but there's 3, 4 Americas. There's an America booming over technology, over productivity. There's also an America that's being left behind. You see that in Wyoming. A lot of the staff people here, they can't afford to live in Jackson.
Tell me about the most important part of your trip, the $1 million cowboy bar. Mike McKee said he's already been there. Does the Carlisle translate into the saddles at the bar?
No, it doesn't. It's a really different feel. And I sent a hate note to Christine Lagarde. Said to Madame Lagarde, I said, I really need to do the interview on Saturday. All the other bankers wait after Chairman Powell's speech to speak. It's considered rude to do any interviews before the chairman speaks. And so I said, Christine Lagarde last year, we're sitting down to, do a world big interview with the head of the ECB, and I said, the only reason I'm going to the $1 million cowboy bar tonight is because of you in this interview. And she goes, buy me a T-shirt, send it to Frankfurt. I did.
Very good. Excellent. All right, Tom Keene, thank you so much for joining us. Tom Keene, of course, he's out there. He's the host of Bloomberg Surveillance on radio and YouTube. You know me, you love him. He's out there in Jackson Hole along with Lisa Bromwitz and Michael McKee. They will be broadcasting tomorrow, 9 a.m. Wall Street time, 9 a.m. to 11. So a special edition of Bloomberg Surveillance out there. And again, Fed Chairman Jay Powell will be speaking tomorrow. That will be highlighting it.
Yep, very much looking forward to that. If you take a look at, say, the options market, like how much of a mover is it actually going to be? That's a question that many are looking at as well. The moves in just 7 of the 20 years, is according to Stuart Kaiser over at Citi, the moves can be larger than 1%. We're currently pricing in about 0.9% to the up or downside tomorrow. So it could not be nothing.
Right.
So if we just back that out, it could be something,
okay.
I guess. Better
exactly.
way of phrasing that, whether the equity or the bond market.
So thank you for calling out that eco data that just
Yes.
broke at 9:45. So U.S. manufacturing activity shrank early this month at the fastest pace this year on further weakness in production, orders, and factory employment. The S&P Global Flash August Purchasing Managers Index slid 1.6 points to 48. Readings below 50, as I think we all know, indicate contraction, and the figure was weaker than all estimates in a Bloomberg survey of economists. Doesn't that just give the Fed more ammunition to step up here? But the question obviously is, oh boy, are they a little bit late here?
But you look at the services part, and that was higher than estimated, coming in at 55.2. And that's no surprise, right? Manufacturing is rolling over, services still strong, but the strength of the services then becomes the question mark. The ECB account was out this morning, and they specifically targeted at the policy transmission is going longer in the services sector, and that core needs services disinflation for them to really continue then to cut. So does the services data at this point hold the Fed back?
That's a good point because, you look at here, again, this U.S. economy, as we all know, is approximately 70% services. Services did come in better than expected on PMI, 55.2 versus 54 consensus, 55 last period. So services good. Manufacturing weaker, but the composite, when you put it all together, came in at 54.1, where the expectation was 53.2. So still showing overall growth here. And again, you look at the S&P 500 up about 17 points, the NASDAQ up 80. So there you go.
And then I leave you now.
You leave me now
Toodaloo.
because you get ready for your television gig this afternoon. Jess Metten's going to come in. She's pretty good.
Yeah, she's great. I can't follow that, so
Well,
I
I
leave you
don't
in very capable hands.
Very good. All right, Alix Steel, thank you very much for joining us here. Coming up, Bloomberg Intelligence. This is Bloomberg.